Hello and welcome to the Friday wrap up brought to you by David Gockstein. I am your host, Landy, and this is a live show. Today is July 10th, 2026, and I'm very excited, not just by the price action on Bitcoin's chart and many other charts at the moment, but I also have not just one, but two special guests in the background here as we have a last minute ringer that just joined the show backstage. But as many of you know, Bits of Wealth of Wolf Bitcoin will be joining here in a little bit as he is sitting in the background. And then the one, the only, the upside down chart master himself. Well, I guess that would be Bits, but then we also have Ash in the background here. So really looking forward to this one. Haven't spoken to these guys on a live stream in a little while, but we often have very different approaches to the charts, but very similar areas of interest and conclusions therein. So a lot of confluence between us. And that's what you should find with good analysts is that we have different methodologies that do arrive to very similar conclusions, even if we might disagree on where things might go next. Something very important is happening with Bitcoin here on the daily, and that is that we do have a higher low in place now for Bitcoin. On the Friday candle, we did get a closure of right around 64,132 here on the index, and that does lock in the higher low close that I was talking about on Wednesday. So yeah, this is shaping up to be, the structure that the bulls would want to see, but there's still additional criteria that we need to see at minimum on closes for me to start looking higher after seeing a higher low come in. We don't want to see this stall out here and then put in equal highs essentially, and then take out the higher low structure. I would give it some room. So bottom side, 61.2, technical break of the uptrending structure after the trend break with a higher high in place and now a higher low would be a little bit higher than that, right around 61 and a half. But I would give it room to account for that Monday swing. So that's where I would want to see prices closing above for Bitcoin to continue to have upside opportunity. Obviously, I've mentioned this many times over for those of you in spaces that join the Wolf Bitcoin show, ATC, or if you've seen me on David's show, The Breakdown, Monday through Friday with David Gockstein. You're pretty well aware of my thoughts on price action, and that's 62 and a half to 65 is a very key area of interest. And I'm just going to quickly run through it, and then we're gonna bring Bits of Wealth and Ash in here, but just get my thoughts out of the way as we kind of check in here, and then we'll throw it around the room and discuss price action, what it is that we're looking for, on Bitcoin's chart and potentially other things. I'm not sure if they have anything that they'd like to show here outside of Bitcoin, but we'll find out, right? But yeah, 62 and a half. We had the close open there. We had the big swing down on Monday. And as long as we remained, above that swing low from Monday, I was looking for the potential for a higher low to come in. We need to see closes above $65,000. If we start to do that, we're very highly likely going to see expansion. I would be aware Bitcoin needs to close above around 65,600 or so. So keep an eye on that. If we start to see Bitcoin push above $65,000, looking for daily closes above 65,560 or so, to 65,600 even. Wow, it's tough to say, but that's where then I would be looking for true expansion up to the first rally off the lows after breaking below $60,000 at 59K here, and then real targets overhead 68 to 70. This daily zone of interest. Remember, this is back here from the trend change that we saw that brought Bitcoin up to the monthly bearish retest at 82 and a half, which was the monthly close open higher low that has been broken down from, and what sent us and gave us the bear market vibes and the bear market structure after the trend break to the lower high trend reversal setup that's now in place after last month's closure. Well, that's going to be a big area. Obviously, it's the prior all-time high. So anywhere from 68 to 69K, but realistically, that's just a daily zone. I would be targeting 68 to 70, which is a weekly, and realistically, 2K at a time. 70 to 72 above there. If we do see that, then anywhere from 74 to 76, with 75 being kind of the obvious median between the two. So just pay attention, close above 65. Look for daily closes above 65.6. You don't want to see swing fails there, and maintain higher low structure here. And realistically, if you start to see price push below, even in the lower term timeframes, below 62 and a half, I would be looking for, that Monday through this higher low on the daily to get tested. And then I would be looking right back to the bottom side monthly area of interest, with the swing low over here at 58 to 60. Anywhere below 60, that's expansion, not just to test the 57,750 low, but to test the mid to low 50s, starting 54 to 56 on the top side of the weeklies, and then down to 52 and a half to 54. And that would be the primary area I'd be looking first move, and then 48 to 50 from there. But so far, um, both are very viable paths from here. It is actually a coin flip until I start seeing closes above 65K that can take out the actual wick high here, this failure right here. What a failure of a candle, but a failure right here at that 65.6. So last thing that I'm going to mention here for the criteria that I'm looking for in the weekly, I want to see closes coming in above that swing. So I know that we will technically be closing, and this is something earlier today. For those that tune into the Wolf Bitcoin Spaces, Ryan had a good question for me, and what do I want to see? I want to see right around 65. 6 to 8 or so closed above on a weekly to set the low. Would a low on the weekly be set for Bitcoin on any closes above last week's high? Yes. But I want to see Bitcoin trading and pushing above on weekly closes above the actual overhead resistance that we have here on the daily, as it is a daily weekly zone of interest. So I would want to see, preferably in my book, closes above that 65 6 or 5 to 8, depending on your chart. In this case, 65 700 on index. That would give me the bias that we would likely be looking at the weekly trying up for at minimum the basis band and possibly a swing above, which would put price right in that 68 to 70 area, as the basis band is right around $70,000, coming in at 69,950 or so. If we start to see price pushing towards it, um, 68 to 70, 70 to 72. And then we could potentially look up to the upper first standard deviation up here, which would be that zone of interest between 74 and $76,000. As this is setting up for a range, very easy to define continuation to the downside below the lows in the lower second price replace band down to the lower third from a weekly standpoint. Obviously, dailies need to get through those mid 50s, but I'd be looking for 48 to 50K in a price replace band fashion by that lower third standard deviation. But I've been making these guys wait too long back there. I'm gonna bring in Bits and Ash to say a quick hello, and I'm sure that Bits has something that he'd like to share here with his thoughts, as he is part of the 75 before 55K crew. And he has literally started a meme on the timeline, I swear, because I'm seeing it everywhere. There's got 55 before 75 people putting it out there, and then and then 75 before 55. And I am, well, I'm playing devil's advocate so that I can be right no matter what happens. Right, guys? So I'm gonna go ahead and bring in Bits of Wealth and Ash here real quick. And there we go. We should have Bits of Wealth in. Actually, seems as though there might be a little bit of an issue here. He seems to have, there he is, there he is, there he is. There's Bits of Wealth. How you doing, Bits? And then we've got Ash.
Yo, yo.
How you doing, guys?
Good, man.
Well, price action has been very kind. Um, since the actual low, and for those in long side positions.
Yeah.
And I am I'm curious to get your guys' thoughts on price action. Bits, did you and Ash, are you there? You're with us?
I am here, sir. Good morning, good morning. How are you all?
Awesome. Yeah, that's great. I forget, it's he's just waking up. He lives in the future and in upside down land. So um
He is indeed in the future.
yeah, I need to know the news from the future. So Bits, if you want to go ahead and show your chart here, if you want to jump into something, or if there's something you wanted to kind of set up for us before we jump
Yeah,
over
I mean,
to
I'm
some of your
just, I'm
stuff.
just, I'm pretty flexible. I'm kind of just here to hang, man. But yeah, let me pull up my trading view. We can go whatever direction we
All
uh
right.
we want to take this, man. If it goes upper, it'll go upper, and if it goes downer, it'll go downer, man. I'm good with whatever.
Oh man. That is probably the best joke, that somebody has ever been able to make last when it comes to the puppet on the internet, because boy, oh boy, I go back and I listen to myself sometimes and I'm like, "Yeah, I really did say that." You could boil it down to that.
That's why people hate you. It's so funny.
I love
Yeah.
it.
Landy, you said nothing. You said it could go up and you said it could go down. There's no alpha. You know what that reminds me of? Is one of Ash's favorite memes, and probably a favorite movie is Nacho Libre. And
Yes.
he's always using the nacho memes. And there's that scene in there where Jack Black he goes to the eagle's nest for the egg, all up on the at the top of the cliff, and
Yeah.
they get it, and he's like, "These eggs are a lie. There's no nutrients. There's no superpowers." There's I can't
They
remember what he
gave me no
said.
eagle powers.
Give me no eagle powers. I feel like that's what people how they act like when they're watching us talk about like the different conditions and the different, like it's just here's how it would look like if it goes higher, and here's what it looks like if it goes, lower. And these people in the comments, man, they just lose their mind. This guy just basically said it can go up or down. Like they know nothing. It's like, yeah, well, you're right. We know nothing, but
It's my absolute favorite comment ever,
Mm,
because it's like, "Oh, well, okay, I guess you really don't wanna know what to look for to see
no,
if it's gonna
no.
go up or down at that point." It's
They,
like,
they they want their hand held, and they want someone
yeah,
to say it's going here. You know, we are here.
yeah,
You know what
yeah.
I mean? They want
When
what the KOLs are spewing all over the timeline. You know what I mean?
yeah,
We
we
are here. Yes, this guy's got the alpha. You know what I
it's an amazing thing to watch, because and I had a good conversation, I mentioned this in the chats, but, Rudo jumped on. I just had, like, an
mean?
impromptu space I opened up very late at night,
I saw
um,
that.
on the
Mm,
West Coast, and, of course, it was the morning for Rudo, and he jumped
yeah,
in. We had a really great conversation about exactly this, because at the end of the day, you end up with a lot of people that are just like, "Just tell me where it's
yeah,
gonna go," and it's
yeah.
like, that's not possible, and
Not how it works.
anybody that
No,
is telling you that they know where it's gonna go,
no.
well, they're doing a bit of engagement farming,
Yep.
because they don't know, and if they're right, they're right, great. I could tell you, exactly where I think things are gonna go. That doesn't mean
Sure.
I'm gonna be right, though.
Yeah. 100%. There's definitely edge if you develop a system, and but even then it's just a little bit of edge. It's just um a little bit slightly more probability leaning into either direction, but there's no certainties, man. It's tough. It's tough to say exactly what, with this very um decisive final, absolute. You just can't, man. You just really can't. So
Yep.
but yeah, you can definitely find conviction in the short term. We can find, and this is where it's interesting, right? Like I think like there's some context you could add to things that give you um higher probability. Like for example, we would all probably agree that I think in 20 years, Bitcoin is trading at a higher price. Yes or no? Like we would all probably agree that that's a very high likelihood, right?
Yeah. Yeah.
Um, do we know with that same amount of confidence that in the next 4 hours it's going to be trading higher? Probably not, right? Like we probably don't.
Yeah.
So there's a lot of that, man. But yeah, no, look, I mean, I'm looking at the high time frame, and we're on the weekly here. Like I'm just observing like the last bear market ride, and it's like, okay, we're riding it down. People are acting like this has been like the most brutal thing ever, and I'm just like, man, like did you experience any of these? These were rough. Like these
Yeah.
were horrible. Even 2019 down to this was brutal,
Yeah.
brutal. But this one was rough. I remember even this first drop, man. I've got screenshots still. I was part of a few different communities back during this period, and I remember that I got really, really bearish up here. Super. I mean, everything was running, and I was posting nothing but charts with short setups. I was just posting shorts on everything. Everything was like, boom. Everything was going to drop 50, 60%, like crazy drops, and people thought I was nuts. And then, man, after it happened, I was like the messiah for a
Mhm.
brief period of time. They're like, "How the heck did you see that?" And I was like, "I don't really know," because I was still learning, but I just spotted it, and I was like, "Man, there's stuff happening here, you know." And yeah, I remember the sentiment here. It was like, "Dude, this is worse than the COVID crash. This is like horrible." Like all of this was just people hated it. So
Yeah.
I don't think it's been that bad this time. I actually think it's been pretty calm, pretty tame by comparison to those previous ones. And I came in like mid or early mid 17, so I wasn't even around for like the early stuff, which I'm sure that had just as brutal swings as this later stuff did. But um,
It was
yeah,
highly volatile. You know what really
yeah,
caught people off guard was the accumulation in 2018 before the large drop. That was what caught people off guard. In so I remember very distinctly, in we're talking like in 2015, we had
mm,
essentially a double bottom, right?
yeah.
And then it was just parabolic, the
two hundred
parabolic
and
run.
thirty dollars, Landy. Wow,
Yeah. Yeah, and this was,
wow.
so I had just gotten into very, very heavily into the mining side of things as a business, not just
Mm,
on a personal level. And, in part, because that low that swept the low on many exchanges
yeah.
took me out of a very, very big position and took my Bitcoin.
Mm,
And I was very irritated. Now, I was obviously smart enough, even at that point, I was smart enough not to have a ton of Bitcoin on the exchanges, but they didn't hit my stop, nothing, right? So we had,
was that your
y
first inspiration for your book? Your
um,
stop loss is my entry.
your stop loss is my entry. Yes, that was I sat down and immediately I was like, "You know what? I'm gonna start a mining business and I'm gonna write this book."
Mm.
But I'll tell you, like, a little bit of historical context of being there, right? This is I had already been through the run up in what was kind of a wild, wild, wild time.
This
So my first entry into Bitcoin was in 2011 on the way up. We were I was,
dang.
I kinda got in right around it was right around the dollar to dollar 50
I
range.
hate you. I
Yeah.
hate you. Yeah.
Did you say
Now
dollar and $1.50,
I
Landy?
hate this guy. How
yeah,
can you not hate him?
I'm like,
2011. That was my first experience. And you know what's funny is
Oh man.
I was an educator at the time, and it was my students that got me into it. They were like, "No,
Mm,
no, no," because I knew what Bitcoin was. I was actually teaching cryptographic systems,
mm,
at the time, and some other things that had to do with tracking financial transactions, and I was like, "This seems like a setup, an open network where you're watching
right.
people move their money." I didn't really get it. I was very suspicious of it from its talk on Bitcoin Talk to its first implementation and launch in '08 and into '09, and then the exchanges getting up and running and that kind of stuff. And then we had Silk Road and all this kind of stuff, right? So, but in 2011, I was convinced to at least pick some up, really study Bitcoin and the ethos and get involved and go to Bitcoin talk forums. So I was in and hanging around during that time period, and in through 2013. We had a nice rise shortly after I got in. We had a nice rise in through the summer of 2011 into fall. We started to head down pretty aggressively,
Yeah.
and then it just took off into 2014. And I remember very distinctly there was a lot of different exchanges at the time that were starting to pop up, and I was like, you know what? I'm gonna trade this. And actually, they started to implement some leverage. There was inverse pairs. There wasn't. You got to remember, you're trading Bitcoin
Yeah.
as an inverse pair primarily. There was not the proliferation of stable coins, or you're trading Bitcoin versus other pairs, which is why I
Where,
love
where,
that this
where
ethos.
was the Mountain Gox stuff? Like, where did that happen? Was that
Oh
back here
man.
like 11, 12, or was it?
Mount Gox, everything is such a blur if you're to nail me down on the actual dates. I remember Mount Gox happening. I don't remember the actual. That was a little bit later. If I remember the actual blow up.
Hmm.
Um, and yeah, I'd actually have to go look.
It says
Because
2014. I
yeah,
just had
it
a Google
it was
because I was
during the
thinking of
bear period on the way down, right? If
Like
I
this
remember
year, like
correctly.
maybe 2014, 2015
Yeah,
uh,
because I
Hmm.
remember it was, not only was it a big deal, and thankfully avoided it, but I'm trying to remember on structure where it would have been. I wanna say it was on the way down, that time period, for after the 14 high,
Yeah.
if I remember correctly. I believe it was during that part of the structure into the
Interesting.
2015 lows. But double bottom is it took me out of position on an exchange, took my Bitcoin. I was pissed because my stop didn't get hit and I couldn't log into the exchange when it was happening, when all the liquidations were happening. And yeah, it was not, okay, yeah, it was the actual collapse date was in
I see
February
February
of 14.
2014.
Yeah,
Yeah.
so it was on that way down, right? If I'm Let me go look at
Yeah,
the
I had
date.
we had
Says, yeah,
market
February
had already
2014
topped. Yeah.
is when they suspended trading.
Yeah.
Mm.
So, but there was obviously other trading platforms that were also getting quite popular at the time. There was a lot of really interesting things, but I got very heavily involved in the mining there. If you were around for that run, that specific run from the double bottom
Yeah,
in
this one looks
15 in
massive.
through 17, it was wild. And so when we topped at the end of 17 going into 18, and then we went just sideways, what caught people off guard is that this was just sideways, essentially
Yeah.
holding on weeklies. That's that larger drop down that occurred essentially in January of 18,
Yeah.
right? And everyone that was in the Bitcoin space at the time was like, "Oh, this is going to absolutely rip. It's bottoming." And that big drop down, that
Yeah.
drop from 6K
I
down
remember that.
to just under 3K took so many people's Bitcoin, and it was really a hellacious drop.
Yeah.
And then to subsequently see the COVID stuff, for those that were able to maintain through into the 2020 2021 run, like, bravo. Like, that was not easy. A lot of
Mm.
guys had OTC Bitcoin that they had taken loans against that got absolutely wiped, so their Bitcoin was gone, like,
Mm.
absolutely gone. So, and for anybody that was here last bear market, yeah, was it brutal with all of the different companies blowing up? Sure. I don't even consider it that brutal because I saw more hardcore early day Bitcoiners lose all of their Bitcoin via the 2018 drop, and then subsequently the COVID drop, because of the way that they were levered up outside of those exchanges and on the exchanges. And they didn't, most of the people from that time period after, even last bear market, I didn't think it was that bad. And this bear market is straight up easy at this point to
Yeah,
kind
it's
of
been
like drive
nice.
that point home.
Yeah.
Who is actually saying that this cycle's that bad? Like, 'cause I keep hearing that, but like the people that I see saying it, like I'm like, I don't remember you from 2017 or any of those sort of previous dumps. And I'm wondering, like, is it just recency bias? Do you think, or is it for
There's
engagement?
there's there's some of that. There's some of that.
Some of that, but I'll give you so I've had this conversation with David Gockstein quite a bit. And he's not talking about the actual prices and price structures that are as bad. His point is that sentiment within the
Sentiment.
space is worse than he's ever seen before, because people seemed more motivated in his view in prior cycles during the bear market. So I don't know if that's something with some of these newer folks that are just looking at the sentiment versus what they remember with rose-colored glasses when they weren't really directly involved, or if this is maybe their first bear market and they've
I,
never really experienced one.
I almost feel like it's the opposite though for me. Like what I'm seeing that I think people are more hopeful still than what I remember in previous cycles. So I've I've experienced the inverse of that. I would say where I think you haven't seen people other than like alts. I think that October event of last year really wrecked a lot of people in terms of their mindset and
Yeah.
expectations. But it was mostly people that were highly exposed to alts, right? People that were really levered up on alts.
Mhm.
But now, I mean, since then, if I'm measuring everything since October forward, I don't know. I sense a lot of optimism still. I sense a lot of people that are very hopeful. And look, I pulled up the 12-month chart for BTC, kind of to bring it back to this, but um,
Yep.
I mean, like we're I don't know, we're halfway maybe to like the worst case scenario probably, or at least and it's hard to say the worst case because there's always like anything's possible, right? Things could get a lot worse than what we think they can. But um if I just look at this 2024 candle, we're about 50% of the way down, um towards the low of that candle, which is that 39K, right? That's like
Yeah.
38.55 or whatever. So
Yeah, that
um
big monthly at 38.5, yeah.
yeah, I mean, like, look, this has kind of been where I've said, like, this is ultimately where I think things can be heading. If we don't bounce somewhere higher, like if we're still following the standard cycle, we have till October. Um, Technically, this is kind of telling me that this is an area to watch. You have a big expansive candle, a reversal year, and then now we're kind of heading back. Probably gonna take most of that back, if not all of it. Um, this right here is I don't like that, the bottom of that at all. But I don't even want to go there yet. Um, but I'm looking at this here and I'm like, okay, we've got this huge 12-month range, and if I go to the 6-month chart, I'm like, okay, um, you've got a similar range here on the 6-month chart as well, where you had this 6-month candle from back in this was like what, July of 24,
Mhm.
and that formed a range, and we really just had slight deviation above that high, and we're now, we're below the 50% of that range. I'm really curious if we're not going to come and sweep down here at some point. If we did that, the bottom here is 49K, which is also another area that we've all looked at and talked about. 49K being another level where to the downside it would make a lot of sense for a low. Um, but like I'm seeing this, right, and taking it back to the sentiment, I think a lot of people are at a point right now where they're okay with, like, you see Gary, you see the macro guys. A lot of guys are talking about a move to 50K, and I think they'd be perfectly fine with a move to 49, 48K. I don't think it would upset any of them. I don't think it would surprise any of them. And what you were saying earlier, Landy, which is why I brought this up, is you were mentioning these these previous lows in the market, and how devastating they were. Like this COVID dump sucked. Even this little drop off here after it kind of went flat and built a base, that sucked. It
Yeah.
sucked. It genuinely was not fun. These look like they weren't fun at all. Like these double bottoms from back here do not look fun. Um, this right here, like I mean, unless we're gonna have a very fast move down, again, I'm sensing that there's too many people that have come to terms with, yeah, I think it's gonna go to like, somewhere in the maybe high 40s, mid to low 50s, and I'm gonna buy a whole bunch of it, and we're gonna go to the promised land after that, right? And we're all gonna be happy, and I'm gonna be perfectly positioned for the 4-year cycle, and I bought the perfect bottom. So that worries me a little bit, that type of sentiment. And I think there's two potential outcomes that could be developing there. Look, I've been hiding this, but just because we don't
Unpack that,
really.
man.
Well, I mean, I this isn't something new. I think we've all kind of touched on this, but this is just the 4-year
Mhm.
cycle data from the last couple cycles. That if you got a perfect repeat again, you're looking at like first week of October, you're looking at roughly a 72% drawdown. That's going to put you somewhere in the neighborhood of like mid to upper 30s. Um, like I think everyone's already seen this 1,000
Yeah.
times. Like this isn't new. A ton of people have shared, a version of this in some way.
Yeah.
But if this is still in play, right? I'm thinking, okay, so there's two scenarios based on like the topic that we're kind of hitting on tonight, which is the sentiment side of it and expectations and how bad prior bottoms were, and the opportunities that a lot of people forfeited because of either being over leveraged or whatever, right? Like they got taken out. Um, I think we're so far into the cycle, repeating, that people are too familiar with it, and we've seen this, right? You've got the cycle deniers. Oh, just
Mhm.
because it's happened in the past doesn't mean it's going to happen again. I agree, it doesn't have to. And then you've got the side that's like, oh, this has to play out perfectly, absolutely, because this is what it always does every single time, blah 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 blah. I think there's a potential, and this is just kind of my current leaning, that we're either going to overshoot this and go deeper, or we're probably going to find a reversal above that.
Yeah.
Um,
I
yeah,
agree.
and
I agree.
that's like, I've really been kind of sitting with that recently, where I'm like, I've been getting bullish at the lows. Like I've been very opportunistic about trying to get long at lows, in the event that for whatever reason we go up and we flip 82K, and suddenly it's like, uh-oh, something's different here. We're above last quarter high. Like what changed, right? Um, but I'm also I'm perfectly okay with buying, below 50K, 40K, whatever, right? Like I've got no problem with that. But I just, the more I like sit with this, and the more I look at the fact that too many people are hosting spaces, and you've got two camps, one that says that the low is likely in or forming at around this, like, mid 50 to low 60s. And then the guys that are like, yeah, I'm definitely buying in like the 30s and 40s. I don't know. I keep trying to think of like, man, how do you wreck both sides? Like, how do you properly just wreck both sides? Because we know that that's what happens when you're forming these tops and these bottoms, is you have to do what no one is really accounting for. And so, dude, if like I've been vocal of like this, like go into the 70s before the mid to low 50s. So far, I mean, unless this thing just rolls over here, which I think you touched on, not just today, but we've talked about it on spaces, that this could still come and sweep lows if we don't see the bulls really step in here and take it a little bit higher. This is still at a very risky place right now.
Mhm.
It's a bad place to long, I'll tell you that much.
It's a horrible place to long. Yeah, if you didn't long down here, this is not the place to long, right? And so I'm thinking like, man, okay, like let's say we get above 67, 68. Okay, you can make a case for this is now flipping here on the lower structure. But dude, if we were to get back above, 80K, 82K, is that the point where people start to write off lower prices? Like, is this level here, when we start going above here, that people start saying, oh, that absolutely was the bottom. Everyone missed it. You're now sidelined. And now we've broken here. We're going so much higher. The bull run has started. The low is in. Is this the level? I mean, is this the level? It's
Yes.
currently last quarter's high, but is this the level?
Yes.
And then is there a scenario, Landy, where can we technically um, go higher here for a little bit and then still fail? And is there a scenario where you can still come sweep the lows?
So what I would say is, and I floated this on a couple of my recordings now, and because the criteria is that's a monthly lower high, as well
Yeah.
as it's the prior
Yeah.
quarter high
Yep.
at 82.8.
Yeah.
It would be very, very rare to see, um, you know, on weekly structure, for instance, it'd be very rare to see weekly structure do
Yeah.
something like this, right? So
Yeah.
higher high to lower low to higher high would be very, very rare in a weekly. So there would be plenty of telegraphing, in my opinion, on the weekly as it led into a monthly. But if we were to close a monthly above 82.8, you will see that many will preemptively say the macro low is in, because it is a higher probability that the macro low would be in. But there's one condition that would need to be seen, in my opinion, after that. And that would be higher lows on the monthly, not
Yeah.
just because you get a trend break, you need to see a higher low or equal low structure. What I would love to see is if we broke that, went down and did the sweep, held the lows on a close, but swept. So you break structure, you sweep the low, and then you take off. And you don't actually get those fills down in the 48 to 50 level, the 45,
Yeah.
the 42, the 35. No, instead it goes down, it dips down for liquidity, and then it completely misses all of the orders and gets everybody to chase. Meanwhile, comes right back up and wrecks all the shorts, because that's something that I could see. And this is something that could happen either way, right? Whether it be lower first, before some sort of a trend break. But if we were going to get a monthly trend break, specifically we start seeing weeklies that move into monthly closes above 82.8, everyone's going to be bullish. Everyone's going to be talking about macro low in before seeing any kind of a higher low on the monthly. And that's where they would technically be incorrect, because you need to see that higher low equal low structure that maintains the monthly close. And then
The,
come
the
down and
reason
sweep
I,
the
the reason
quarter.
I ask is this, right? Like is there a case to be made that there's a range from, call it 100K, 98 down to 60? Because this is the 6 month range. This is your
Mhm.
6 month candle, right? Six month high, 6 month low. Okay.
Yeah.
Is there a case to be made that we could range inside of here and deviate that, sweep that last high, but ultimately still be range bound to this larger range?
Yeah. No, there absolutely is a case. Let me switch to my screen real quick, because
Mm.
I want to show you why I think that there's you make a very good point that actually I have some confluence for here. Um, Let me get the right
Yeah, I'm just trying to play like devil's advocate here of like what is because I keep going back to this. Like I'm trying to ask myself, what would it look like if we go into a period where the market gives the illusion of the low being set, and you have something that you can use to back that? And I'm thinking like, well, a move above 82K would certainly give people the ammunition to say that that's the case. And then ultimately something happens, and then we just travel back, not like dramatically lower, but back to roughly the same lows, maybe a little bit lower, right?
So right here, I have the Bollinger Band set. This is just a triple Bollinger Band set. So normal, upper and lower
Hmm.
second, would be your upper and lower band on a regular band set for Bollinger Bands. And the reason that I bring this up is because as long as Bitcoin is trading and closing below the basis band, you're going to see
Yeah.
continued expansion to the downside of this lower second and lower third standard deviation.
Mm.
So Lower second standard deviation next month, no matter where price goes from here, is going to continue to head down. Right now, it's, between 54 and 56, depending on which chart you're using. Here on index, it's
Mm.
at 54 and a half. So you could very well see a rally up that breaks the lower high on the monthly, for instance, and then, deviates it and then comes back down and tests the lower second standard deviation as it's falling, because closes below the basis, um, and even around it, you'll still see continuation of volatility expansion to the downside, because you need at least a month or two before it would start to go back and start to lurch back up for contraction again. I think that that type of a path, I'll be quite honest with you, is lower likelihood.
I agree. I agree with
But
that. Yeah,
what
low
it
likely.
would mean, what it would mean if we got a monthly trend break, because the more likely path on this would be, you confirm, the higher high trend break on the monthly, you come down for
Higher
higher low,
low.
equal low
Yeah.
structure, and then you come
Yeah.
out the other side, right?
Yeah.
And that would be the more statistically likely path. But what you just floated is actually something that I'm giving some consideration to, because we are not just in, and I've shown you this before, not just in a monthly, but we're in a quarterly range where, we have the basis band, which was lost on the quarterly, in the prior lows, but we are in a very, very large range that is starting to really define itself in terms of where the 20 simple is to the lower first and the upper first, which is, right above 86, 86 to $88,000 up here,
Mm.
and starting to go sideways, which means that we're in time frame. We're in a quarterly time frame range that wouldn't resolve until well above $100,000. I mean,
Yeah.
well above. We're talking 115 to 120. So, and this is where muted rallies to like 140, $150,000, people will get excited for 200, 250. But from a quarterly perspective, it could easily top out in another cycle high,
Yeah.
right? Um, and just continue to be muted. But what you just floated is something that I think would actually take a lot of Bitcoiners by surprise, and that would be long form consolidation. Because if you got a lower low, then you start coming up, and maybe you get a lower high, higher low, and then you make some higher highs, and then you just start doing these things where you're trending back to the
Yeah.
highs, and then you reject and you trend break, and then you go back into a downtrend. And now, before you know it, we're in 2028. Right? We're coming into 2028 with the halving,
Yeah.
right? This is something that, look, this is purely speculative, but for what Bits is talking about, this is actually something that is not off the table. Oh, I just sorry. But yeah, this is something that is absolutely not off the table.
That
Now,
that would be effectively a completely like a change to the cycle theory though,
Yeah.
then, wouldn't
Oh,
it? Like, you could
100%.
be defining that, yeah.
yeah, and this would be where I think that this particular cycle would be the one that
Yeah.
defines and changes cycles forevermore for Bitcoin,
Yeah.
if that were to happen. Because what you would see is a lot of miners at 1.8 million Bitcoin would have to start being expended, and then they become a non-factor. Because right now everybody says they're a non-factor because of emissions, but they are absolutely one of the biggest factors, because they send and receive the most amount of Bitcoin to and from exchanges. People talk about OG wallets and whales. Well, a lot of times they're not paying attention to that. Some of these wallets that they're calling whale wallets are actually Coinbase transaction, not Coinbase, the exchange. For those that don't know what I'm talking about, it's the payout transaction that you can track from mining rewards. They don't pay attention. These are miners. Those 10K clips, that keep coming in, the 200,000, 250,000 Bitcoin that came in October of 2025, that was miners. That wasn't just OGs, right? Those are miners sending and receiving Bitcoin in response to where price was going, right? They're responding to price, and in some cases they have enough that they could try to push price around, but typically to the downside through the sell side, because they hold the coins. You're not
Yeah.
going to, many of them do trade, by the way, especially the Asian miners. They get on the Asian exchanges and they trade all the time. But point being is, this would be your distribution structure, long form distribution for many years that would be changing a lot of people's minds. OGs exiting, getting tired of waiting, miners distributing coins over time to then bulk up for the future of the mining industry and the way that it's going to look for private mining. And it is something that I've been heavily considering and having conversations in the background on, but I have not actually brought to the forefront in terms of thesis yet. But let me
Yeah,
flip back
it's
to
low
you.
probability. I don't give it a lot, but I also am thinking about the fact that this cycle has been different. Even just from like what I cover frequently, which is like looking at Bitcoin against here, and I'll delete all that because that's not, I don't think it's updated anymore. But looking at how Bitcoin has changed in character this cycle over the last really since 2021 against the indices, against equities, right, against gold, it just looks completely
It's horrible.
different than, yeah, it just so I mean, you're seeing this type of stuff. And the what I had floated was, what happens if by some chance you set a lower low, something that's never happened on BTC against gold or against equities or against like commodities, as like measured through like GSG here. This one has a long way to go. I don't think it'll happen on this one, but um,
Gold
much
would be a big candidate.
gold. My God, gold is right there. One that I do have one that here, we'll put it on a separate one. We'll go here, but it was what was it? The Kospi over BTC. This one, Tony shared this one with me,
Oh yeah,
which
yeah,
was,
Tony. Yeah, I remember him
yes,
bringing this up.
yeah. This one is one of those that you know. Well, here, let's flip it this way. It actually went pretty close to that low, and it caught a bounce there. I mean, look at that. I mean, um, almost right there, right? So I don't know. Like, what if we start seeing this type of behavior where you're basically testing a prior cycle low against something like gold? And then, I mean, you just
And look at
imagine the
those two
narratives and
highs,
stuff.
man. The two highs where those lows came in. Perfect.
Oh, on
By
this
the
one,
way, on
yeah,
that chart.
yeah,
Yeah.
yeah,
You
yeah.
just draw a line, shoot a horizontal right across
Mm-hmm.
there.
Yep. Yep.
Because if it fails, it's going to fail in a big way.
Yeah. Oh, 100%. It's going to fail in a big way. Yeah, yeah. So this is, and granted, like the Kospi, I don't know enough about why this would be breaking this way. A lot of people have said there's really only a few companies that really make up most of that, but still, I mean, it's one chart where same thing. You could say it's never done this before. It's doing something for the first time that it's never done before, which is get close to a prior low. So
Yeah.
I don't know, man. It's like all this stuff is fun to look at. It's fun to speculate. I'd be really worried if it did it against gold, because then I think it starts to break the narrative of Bitcoin is digital gold in terms of like the headlines, right? Like people are going to be talking about that. Peter Schiff is going to be just absolutely unbearable for a while, and it's going to be wild. It's going to, and would that induce that sentiment? Would that induce some selling that would then lead the USD pairing to go deeper than it needs to go, right? Like maybe if we would have bounced here somewhere near where we are, or maybe that 49K, or maybe even that 39K, does that kind of fear and FUD send it a little bit deeper, right? Hence the overshoot versus front run type of like thinking there. So
You know what
um,
here's my thought process on this. Just putting my my previous industry hat on.
sure,
Give nobody what they want.
yeah,
Meaning, don't give
yeah,
people the lower prices that they want,
yeah,
and don't give people the higher prices that they want, and keep
yeah.
it range bound for an
Range it.
extended period of time. I mean, for a very
Yeah.
long
What
period
what
of
what
time.
if what if Bitcoin USD? I mean, this is a good comparison here. What if Bitcoin USD does this next cycle, like this,
Yeah,
right?
yeah.
Cycle from high to high. Like, what if you get this here?
Yep.
What if all you get is something like this, right?
That is something where, um, for anyone that studies how traditional market moves, typically, obviously, like we just use SPY as an example, it's always
Yeah.
sideways and up, sure. But when you zoom into certain time periods, what you'll see is that it becomes range bound and
Oh yeah,
a high time frame, high side structure
yeah, for a
that
decade.
just chops
Yeah,
around before it gets larger corrections.
yeah.
Um, but more akin to gold, what gold did with its long form accumulation period before it had the monster runs that it had. If you just look at gold specifically, it went through, a decade of sideways, but a very large range, and still holding the lows and really carving out a very wide high time frame range that it was trading in for a long period of time. And then it just absolutely melted faces, a few times in between. And that is something that I could very easily see for Bitcoin in the future. So I would not be surprised, to be quite honest. And,
Something like that.
yeah,
This is the bars off of the BTC Gold chart.
yeah, I could absolutely see something like that. And
Yeah,
one of the things that I would wanna point out is I would not be surprised to see if that, Bitcoin versus gold just gets swept and that low holds up on closes on higher term time frames,
ooh, that would be interesting. Yeah,
which, by the way, would actually lend to somewhere around this area becoming a macro low. But
yeah,
I think see, here's my opinion. Um, Whatever comes next needs to happen quickly. And
yeah,
in my opinion, it needs to happen quickly. If we get a sell off and another leg down, I think that it needs to happen quickly. Because if we are going to take in the confluence between price 4-year cycle for the prices,
yeah.
that has been so accurate, including to the day on the high, for 2025, we need to see, maybe another move up, and then immediately we need to see that leg down. Um, or we need to see things kind of stall out and then crawl their way down and just get people sick of it and then run away from their bids that they keep setting lower. Um, I'm actually my base case for Bitcoin was 58 to $60,000, somewhere in and around there for a macro low deviation of trend. And I discussed this when we were still in the 120, $115,000 range when we started to break down. I discussed this with David. I floated it on my shows. And I have talked about it across various stages. The bias breaker there is any higher term time frame closes like a monthly below $55,000. If we see that, that's off the table. Any kind of high time frame close like a monthly below $55,000 will initiate further expansion down. But until we see a monthly close below there, the door remains open for this area. Even if we get a nice sweep like into the mid 50s, fine. Even low 50s. If it closes above 55, 54 to 56 or something on a monthly, door remains open for a trend break into higher low structure that begins the bull market by setting a macro low over time. But there is no, we literally are in a move in progress on the monthly right now, right? There's no low. This is not a low yet on the monthly. What do we need to close on the monthly? Bits for it to become a low. I was just looking at it. Um,
I'm busy working. Hold on, I got a very important project I'm working on here.
for me, oh, nice. For me personally, $74,000, right where, you're looking like, I'd mentioned you're part of the 75 before 55 gang,
100%.
right?
Yeah.
And I think you actually have started a trend by saying that, by the way. I've heard that
It's
more than
funny. No,
anything else.
Gary started saying it because he jumped on a space
Well, he's
with me.
55 before 75, right?
Yeah, yeah.
Okay.
He went up, and I was like, yeah, I think we see 72 before 55, maybe even 75 before 55. He's like, oh, I think we're gonna see
Yeah.
55 before
Before
72 or
75.
something like
Yeah.
that. Yeah, and I was like, all right, cool, whatever.
Hey, I love it because it's become a meme now.
Yeah,
And I've seen it everywhere from, people who like to partake in listening to various shows and then commenting on them. Um,
100%.
and in this case, you know, one of the biggest factors for me is we wouldn't even see a monthly low set until we saw, because of this candle right now. We the only way a monthly low is getting set is if we see it close above not just the prior month's candle high, which would be the $74,000 high of the previous month.
Good Lord.
But for me,
As
I would
he
need
says,
to see,
AI.
would need to see 70. What was the close there? $76,000. I would need to see that because the other monthly, the prior monthly candle is what made the inevitable lower low structure. And if that were the case, if we start seeing monthlies close above 74, 76, it's very highly likely that we test 82.8 and get a trend break on the monthly time frame.
That
But
would be wild.
that's just where I'm looking. And I've been wrong before, not often, but I have been wrong before.
Well,
Yeah,
it looks. You never tell us if it's going to go up or down, Landy. So it's
exactly. How
Yeah.
could you not be? You know, you're always just you give both sides, Landy. You're
Exactly, because I'm objective. I cannot be wrong, which is the most beautiful part about actually being an objective analyst. Because I can plan for either scenario and then I can trade it. See, that's the difference. There's people who talk about it and then there's people who trade it. And I actually do trade it. So that's why I'm able to give both sides. And that's why anybody that's actually a good analyst understands both sides and is not directionally biased. And that would be brutal right there, which you're showing. But
yeah, this one I hadn't showed this one on. I think I don't know. I can't remember if I showed it on stream or not. But yeah,
Yes.
this has kind of been my. This has been like my primary. Yeah, this is the one that I'm like, ooh, okay, yeah. Like this is the one. This is
that would
I
be
like this one.
that would be the monthly 45.5 tag, that prior bear market lower high close open. That's 45.5 or so, or somewhere in and around there.
So it's a little bit above here still.
Yeah. So
but
you're
it's
looking at that bear market lower high between 45.5 and 48,000. Yeah. And
you do have as well, like, so that's the channel, but
I want to see
what
that,
you
by the way.
yeah, what you're seeing the early developments of is I'm going to say this and I'm going to regret saying it.
Here, pass the screen to
Yeah.
To Ash. We've done enough
Definitely.
yapping about this stuff. Ash is a technician. This guy's a sniper.
So I mean, realistically, like, I think like your channel that's here.
Yeah.
You know, I honestly just think like effectively, I'm basically just watching that now. It's not much different, right? It's not much different.
No.
Basically, effectively, there's your sort of 72, 75, you know, close enough range.
Yeah.
That would also recover that vector or just wick above it, bring it back down, and then maybe we get something kind of a puke out, and then we start to do this, right?
Yeah.
That's kind of like, now, like, I've only put that on this morning. I feel dirty leaving it on there, but like whenever you start to see that sort of action there, like it makes sense unless they're going to effectively just do that and break down, which, I mean, look, let's not say
it could. Yeah, it could,
but I think, to your point, I think it's more likely that it makes its way eventually somewhere up into this range, and then we sort of work out what's going to happen here. If they were to break out up here, that would probably be a little unexpected to me.
Yeah.
But
low luck.
It doesn't happen, right? So I'm, and if you go back and look, a lot of people were drawing, and if you can remember back here, a lot of people were drawing the exact same thing here, right?
Yeah.
They were drawing the same type of falling wedge.
You get the deviation
situation. Yeah, and they were going, oh, look, we're coming down. We've started to form a bottom, you know, and they were expecting this, but the bum fell out with all the
market makers inverted their chart and they forgot it was inverted.
And that gave us a little
Jane Street,
Binance, and CZ all inverted their charts on accident.
I remember that. FTX. I was about to say Jane Street. Like, it wasn't Jane Street. God.
Alameda had an inverted chart. They thought price was going up, it was
yeah.
going down. Hole in the balance sheet was only
Well, I
expanding
was
to
like
8
this
billion.
before, and I was like, "Oh, look, that's exactly what we're seeing. That's exactly what we're seeing." So, I mean, that's what I. So, whether or not it does do, your thing bits where it is that parallel channel, which you're doing, was it here?
I grabbed it off of I anchored it off of the recent low and then pulled it back to the previous one and then grabbed the high.
Yeah,
That swing in
so
between,
that's fine.
but same thing. Yeah.
Yeah, it's. I mean, in either way you draw that, it's within $2,000-$3,000. You know, they're all like, as far as like in the long term scheme of things, they're all pretty similar, right? So I'm happy with that.
And that also aligns with the filling of like that weekly candle range that you have there on that recent vector candle, that magenta one.
The
most recent one, just filling it to the top. Yeah, exactly.
Exactly right. And this is all that. I don't know what, I might have accidentally deleted that, but that's all around that same, like, you know, I like to do that 50% of the vector.
Yep.
That's all of this sort of, the effectively just coming back into this range to wick it, maybe come down. So like that's why I like that range. Like on my lower time frame charts, I have that exact same range marked up.
That's also where the quarterly and the 6-month rolling volume weighted average price is at. Yep. So your 3-month is at 70,000 flat right now, and your 6-month is at 71,777.
Yeah. Okay. Well, that all makes sense.
There's a lot of reasons to be looking.
Seems to be the. I mean, if you were ever to look at that sort of thing, be like, well, I mean, you've got effectively some sort of some bullish candlesticks are bouncing off a higher term Fibonacci range, right? Yeah. In that sort of same location where there's previous, you know, quote unquote support, all those sorts of things. So it makes it there's it's not like a hopes and dreams thing. There's technical basis behind it.
Correct.
The only thing that is it on this one that I've kind of got this drawn out? So this is just on the daily. This is why I've got that marked, that range. So like you can like that's the 50% that big weekly vector that we were just looking at on this chart. That's this one right here.
Yep.
And that's why I'm interested to see, and like I've drawn a channel here to your like sort of not too dissimilar to yours, but it's just on a lower time frame one. But what I think is quite interesting here is you can kind of see a reason for people doing this, right? Because you can start to see the wicks of that. People have actually started to get, oh, this is a range where I should expect to see some hesitation, some dare I say it, some pullbacks, not necessarily rejections, but like when you're starting to see those wicks shoot through, you know that's you can start to see where people are drawing trend lines, right? Because it's literally drawing that for you on the chart there. And I've seen a few people also draw this as well, right? Start to draw things like standard triangles like this now. You know, there's been a lot of that, and unfortunately we've seen these things. They can do this. It's just the same as they can do that, right? So like a triangle in the day tells you nothing besides it's a bloody triangle. So like there's a million different ways to draw now based on if you're a wick person or you're a body person or whatever. But the reason I like this at the moment, and this is sort of probably where I need to drop to a lower time frame, but I'm very interested in just seeing what happens here if they can get here. Yeah, because I think this is actually going to be that big telling point whether or not your case for getting up here is on, or whether or not it's going to be something more like that, and then it's just going to puke. Yeah. That's a really interesting point for me. So I'm happy for this to keep coming up here and then show me how it reacts. Correct. Here. Which and you're on. I think you're in a similar vein as well. Let me see if I've got this one here. Maybe I want to go the 1 hour.
I just hope it goes up because I want to win the bet against Mr. Spread. And, that's my only motivation at this point.
That's hilarious.
See, that's how you don't
Mr. Spread. Freaking, I got a lot of love for Mr. Spread.
That's funny. Yeah. I get him on my timeline a lot more now. I don't know why, but I didn't know who he was for a while, and then he started showing up a bit more. And I'm like, oh, I like this dude.
Yeah.
I just thought though I'd talk through a little bit the because this is the discussion that I think it's you and me had back and forth at the start of the week when we were in this range, and it's sort of the one where most of my chart posts were about this week, where we saw what was because they've broken, but was the previous week high, and we saw this move, and then we saw the lower high, and then when we dropped to lower time frames, which I'll go to, we saw the breakdown, right? We saw a clear breakdown. And this will be more useful on the 15 because this is where we're starting it. So we had M formation set up into a Tuesday session with a lower high, and they gave us what we were looking for. The problem that caught me out. Luckily enough, I took a very small profit on this trade after I saw that bounce, but we saw them come down and then effectively go, okay, that's all we want. And now we've started this move, right? We're getting
total BS. Total BS. That
so it's been it was interesting though, right? Because like it came in. It was unexpected, but the reason for me it was unexpected was because I normally trade swing on the 1 hour, and the reason that I went back and started to post more information about it was the 4 hour time frame, and it was because of this. We had the strong move up to the 200 EMA, which is our yellow one, right? And then we saw that, which looked like the breakdown. Right? It looked like the break, but the reason we got suspicious on Wednesday-ish was because they were unable to break below here with any kind of vigor. Now we know there's liquidity down here, right? We all know that, but they protected it, right? And if we're trying to look at higher time frame with lower time frame waves, the stuff that I find really interesting is if you are inside, if you're trading a weekly swing inside a higher time frame range, then your swing range is going to be shorter and it's going to play out on a shorter time frame. And that's what I believe, at least at the moment, we saw here, where we saw the swing down. It only played out on the 15-minute time frame, and that was because we were actually inside a larger consolidation between 4 hour moves up. Right, so that's why. That's how I believe that's how that played out, and that's how I've currently got it charted here. So, what I'm interested to see is there's a nice order block here at the moment, right? If we look at this fella, so there's a nice order block here, right? Now, so far they haven't visited this, right? Now this might be being used as protection, okay, as opposed to bait. But what I want to see is if they are going to give us this next move, right? I'd like to see this whole range be held and then see what happens into Asia. Like I think Asia has sort of opened not long ago into the Saturday session. So we'll see how Asia decides to play it out. But I think at the moment, because we haven't seen any categorical breakdowns just yet, we haven't seen high rejections, I do believe that this is more likely to play out. And then after that, I'm going to see if I'm hoping to see a level of consolidation to prove that there's not just been a range deviation. Okay, because they could still do that before we sort of see effectively higher prices, which is going to come back to our 4 hour time frame and get rid of that, because that quote unquote trend line will be cactus, right? It will no longer be a support resistance sort of range. So that's going to give you somewhere around there. They're going to flip that 200, and that's when everyone's going to start coming in. Like it'll start to shoot up, I think. And you've got all this liquidity, all this gap start to become a lot easier to tap, because you've moved out of this. You've moved out of this big chop range, like this really heavy volume, high volume node sort of range. You've flipped, your VRVP range as well. You've gotten above your previous week high. You've proven it's not a wick deviation, and that's when you're going to get something a bit more aggressive into, say, Tuesday next week, and we start to see that swing eventuate into those ranges that you're looking at.
Yeah,
something into that. So like that's sort of where I'm sitting at the moment. I'm
take that spread.
Yes. I don't want to see those. I don't want to see the weekend trend though. I'd like to see them complete this today, and then just move into a nice bit of consolidation. Yep. That's what I prefer to see. I don't like seeing weekends trend in a big direction. Yeah. That's when we start to see that really, like that rubber band starts to get really stretched out, and there's a ton of inefficiencies that they can come for them. And if you're, say, not in a position at that time and you're looking for one, you've got to be in the right place at the right time to get it. Otherwise, you might find if you just take an entry, say, in Asia, you're almost very likely going to get stocked out somewhere in deep into the UK or the US session on, say, Monday Open or something, So for me now, I closed short somewhere around here. I took an entry long Asia. Okay, so I'm still in here and I'm hoping for this continuation. But if they do, like if Asia decides to sort of set a lower high and then come down to here, I'll probably just close my long and then I'll just revisit, sort of come in next week and see what happens. Because if they did that, I'd be less likely to think that they are continuing up, and this is again just another deviation, and they might then be setting up for. If I go back to our little liquidity thing.
Was that the Monday low?
Yeah.
Be about then, yeah. I think they'd be starting. They might be setting up for this for this.
Yeah.
And what that would mean to me.
That's the zone I was watching, man, and they just didn't give it. They just didn't.
They didn't, right? That's what we were all looking for. Like, this is a great place to look for a new long, and they were like, "Nah, they're not gonna have it." Yeah. It's like, but if they are going to do it, that's going to then give you people then again come back to this, and they're going to be. We're in a wedge. We've come up. We've set a deviation, and we're going to come back down again, and then people are going to be looking in this range again into these 4-hour AOIs, right? For new entries, for the hope then to trade back up again. So it's all like, again, it's classical if then stuff, but like it's if you're not long now, or you're not long from much earlier, this is a place where it's probably not necessarily your highest probability risk to return to do so. And that's why I think the chances of more shorts coming in sooner rather than later is probably higher likelihood than not. So, again, I'm currently long, not from the lows like you were, Bits.
Yeah.
But I would like to see at least some wicks into this zone to sort of eat into these 4-hour vector wicks. That'd be really nice to see. Get everyone long right at the end of that deviation and then bring it down. That's what I'd love to see. But we'll see how we open on Monday. But yeah, at the moment, I'm hoping for that last little push up. I'll take my profit there, ideally, and then I'll be fully out until the week opens again, and I'll reset and start to play again on sort of Tuesday, I think.
Yeah,
that's all I got though.
It's what you guys are talking about is pretty much right in line with what I'm looking for in terms of I want to see daily close above 65. Right. And obviously we're all dropping down to lower term timeframes to evaluate the structure and the chances of getting there as it comes into a daily close anyway. But I think that's where daily close above 65 will push things significantly higher. I have put on my crayon eating artist hat, and I have drawn the falling pizza on the weekly. Right.
Yay!
Yeah, so
obviously it's pepperoni.
Yeah. You gotta have a good amount of pepperoni on your falling pizza, and this is where if we were going to come up, this is obviously the same area that we're looking at, around 72, right there at the top side of the of the pizza, and realistically, if we were to push in this direction, jokes aside with all my pepperonis here, because I literally just put them on there to be like pepperoni. But jokes aside, this is where I think, the thesis that both of you have kind of floated, in particular on lower term timeframes for what Ash is looking for as it relates to the same kind of thesis that you have for the higher prices before lower,
Yeah.
would be coming off of the lower low, coming up and making that lower high.
Yeah.
And that's where things can go lower and sweep the lows. And, honestly, if we're looking at a weekly time frame, for that to develop, obviously structure and trend needs to develop well on the daily and maintain, but we'll probably get some shifting structure throughout the dailies. And in particular, I'd want to see consolidation into a move up in between to give it some room. But that puts us in towards, September, October timeframe. I'll be
Yeah.
honest, that's why I'm saying like we need to see something happen fast, or if it's going to end up being a slow drawdown, or we get a slow march up and then maybe even a faster move down. But if it's a slower march up, obviously bulls take the stairs, bears like the elevator.
Yeah.
That's where I think we're getting so close to quote unquote price cycle timing for the 4-year cycle in terms of price action. For those that don't understand, there is a difference between the price cycle and the halving cycle now, because we made a new all-time high prior to the halving, last halving. So there is already divergences in play. But that's where you could see the potential mid to low 50s. You see your 72 to 75, right? With the deviation that Ash was pointing out. And yes, I'm being jokey with the pizzas and the crayon eating, but realistically, that is where you can see that we could get 72 to 75 before, hey, guess what? 55. And that makes complete sense. And I don't even have to draw it like either one of these guys. They've got different methodologies for getting there. And I'm making a joke about pizza, and yet we can still come to the same conclusion. Why? Because I'm pulling what Ash was showing. Whether you're taking closes or wicks, I'm pulling just the wicks on this to get the wedge, right? And the wedge that he was talking about back here was something that on the weekly there was the larger wedge down where people were trying to get this wedge look when it was more of a triangle down that fell through, and they had massive downside targets to 10K, 12K. For, I wouldn't say massive downside because we hit 15 and a half. It's
It's
not
because they
gonna
had
be
measured moves. That's why they were looking for it. They were taking classical descending triangle
yes.
measured moves. That's why they were doing it. I think, yeah.
Yeah, and I was of the opinion that it was not going to hit there. I was looking for between $15,000 and $16,000, but you saw a lot of this at the time. A lot of like, well, look, it's not going below. We got a triangle, and then it rejected the triangle, and everybody was freaking out. 10K, 12K incoming. We're all gonna be Sam Bankman-Fried's biatch, and Elizabeth Warren's gonna come to our house with the FBI and take all our Bitcoin. Right? This was the game at that time. And it could look a little bit different depending on how you want to draw it, but whatever. Either way, rejection off those lows, and everybody was like, "Oh my god!" But I mean, realistically, on the weekly, it was very, very simple. It was a downtrend. If the lows drop, you're going lower. Obviously, duh. I mean, that's like an obvious thing. But what did we get? Is we got the lower rejection to the higher low that was set there right after. You're going to get the W pattern at some point, right? You're going to get your M's, you're going to get your W's, and so on and so forth. So it's about where does that develop in something like this? And I will be gracious to everyone, and I will get rid of the pepperoni. Some people use cheese pizza only. I apologize.
I maintain you had that in your object tree already, and it was just hidden, and you were preparing to show that from the beginning.
Oh man, look, I was gonna draw like a Crayola and write Crayola on it for the actual channel itself instead of the wedge, but I was like, nah, the pizza sounds good right about now. I'm kind of hungry anyway. But look, this is something that one of the things that I keep mentioning every time I bring you guys on, or I bring others on that are that are really in tune with analyzing price, that actually trade the analysis that you're putting out there for the conditions that you're looking for, is that we often have many different methodologies for finding this almost the same exact conclusions that we agree with those different methodologies of getting there. And
I just use the Wyckoff, sir.
uh, look, all right, so now that you brought that up, I'm not gonna lie to you. I am not
Where's
gonna
the
lie to
spring?
you.
Sir, I just use the Wyckoff.
This
And I adjust it until it springs, sir.
well, look, I love it. I love it.
It's like a
I can't
coilover.
I can't hate it, right? I cannot hate it. But this is where we're still in 25 on the daily here. Let me zoom over and get over here to last cycle, because realistically at the highs here, this actually did play out as a Wyckoff distribution
No.
to Wyckoff reaccumulation structure. It did. Like it, and that's one of the reasons why it became so prevalent, because it really did play that way. And what you'll often find is that, you know, um, what people were doing is they were fitting different versions of the time frame and just getting it wrong, which is why I don't think it's worth trying to map it. I think it's worth just trying to understand where we are in the trend, right? It was very easy to understand at the high last cycle that when we saw the actual trend break, because where did we have the we had a higher low in here. It didn't quite set it in April of 21, or in March of 21. It set it in April, and then the very next candle put it in an all-time high and swung body structure of the inside bars over here. And realistically, this was this swing low was the breaker for me at the time, where I was looking for significantly lower prices. I was looking for this entire candle structure from the high to the low to be in play. And that's probably what you were looking at, Bits, at the time, right? You were probably looking just over here like, yeah, no, this is definitely going to be coming down here, right? And there was even, in lower term time frames, the little accumulation before the bigger move up here.
Yeah.
For the 27 to, but essentially looking somewhere at 28 to 30 anyway on the downside. But it was all predicated on, we have a higher high, higher low. And if we put in a lower high, which we did, hey, that's the trend reversal setup. Because what did we have? We had me hitting the question mark, which I constantly do these days. How freaking annoying is that?
Do you need some tips on how to use the arrow tool?
Yeah,
We can help.
apparently. Yeah. It's like Clippy popping up in the old days. But we had higher low, higher high, lower low, lower high, and people were in denial. Like, we broke
Yeah.
structure. Like, people were in denial on this move up. And I was like, look, the condition is that it's got to close at minimum above 60K and then take out 65. Right. We need to see it close above 60K and then take out 65. And I was yelling about this, like, yo, you're all getting way too bullish. It ain't going to 150 unless we were to see 60 taken out and then 65 taken out subsequently thereafter. We need to see minimum reclaims on closes for the weekly here. It did not do so. I was filling shorts off the lower term timeframes, the rejections at 60K, and we dumped out. And in lower term timeframes, there's a 4 hour to the daily. I remember very specifically at 54 to 56 that I was like, if this breaks down, I am just slamming shorts in, because I had already had my shorts from 60. I was just ready to go, and it rewarded me in kind. This is, we have very different methodologies. I like the very simple stuff. You have trend break to trend reversal setup is like the name of the game, especially when you're doing something like this off of where I was calling for between 68. I was calling for, at the time on the monthly, I was calling for 68 to, it was not here, obviously. I was looking for $68 to $69,000 at the time. After we hit that, right? So during the first move up, I wasn't really enamored with trying to pick the top. It was more of a week to week basis. But I knew that after we mean reverted for this, when we mean reverted after the big expansion, right? Because what we had off of the lows was we had the big expansion up, and then we see volatility compression, big expansion up. And the easiest way to tell is you have the bottom side bands drop right off the screen for a monthly time frame for volatility. And then we started to get this ticking back up. We had a reversal in the lower first, and we got under the upper second standard deviations. And I felt very strongly that we were going to pin out there, and the only way would be to create another expansion, which would be very rare. You always typically would get a bear market before you get a re-expansion, and that's where here we had expansion to the upper third, expansion through the upper second, upper third, but it's always tagging the prior month's upper third. So that's why my calls were so tight here for calling the highs, right? We had the upper third standard deviation. I was looking for, if we were going to make a new all-time high, I was looking for between 72 and a half and 75 at the time, because that's where the upper third was. And then in the subsequent move up, we mean revert and we move up again. And if you look at where the prior month's upper third was, so once this month closed, I said if we were going to come up, we have a checkpoint, in and around here, which was at 85, which, by the way, many of you remember my 85 call on that weekly and daily area. And then we had the upper third moving up in that candle. I was looking for around $100,000. Next month, it's price replace band. We're going to get somewhere around the 108 to 110, and we ended up somewhere around there. And then what did we do once we mean revert and the bands get sufficiently over price action? This becomes an area of resistance, nearly pinning it every time. This tightened things up. And why do I put it this way? Why am I even talking about any of this? Because this was expansion to compression at the highs. We went into a range at the highs because we spent so much time off of the initial expansion, correction again, and then reject the top side, that typically what you do when you're looking at volatility metrics is you run the top side to the bottom side, and then typically you bounce around in between. You might deviate below the lower second or above the upper second, but it's not until you get close over close price momentum. So 1, 2 closes above, initiate expansion. We got 1 close above. We had the we got continued expansion. So 1, 2, continue expansion, mean revert. We got 1, and then a bear, and then we tried again and failed. That's not expansion. We come up, we tag it, no expansion. Downside, tag it, we're getting expansion, but only because we're coming from a range compression at the highs, because the failure to continue the expansion between these two highs decreased volatility, decreased the volatility to a point where you become range bound in terms of volatility metrics. Obviously, this is one portion of what it is that I look at. I look at trend, support and resistance, volatility, and momentum. And the first 3 make up momentum. So trend, support and resistance, and volatility is how you create momentum. And right now, when I say 55K is the breaker for me to the downside, lower term timeframes for you guys, which you're tracking, if we get the 75 before 55, if we get down here to 55 and 56, if we start dropping this on the monthly, that's expansion, right? And then if we see month over month momentum build below the lower second, that's true expansion to much lower price targets, 30, 35, 38, 42 to 45, definitely in play there. Yep. Same goes for the top side. So it's really interesting, the different approaches. And, I know that you trade quite regularly, like the hourly setups as it relates to the weeklies. So you're taking into account, Ash, the higher term time frame setup. I know we lost Bits there. Or no, Bits is still here.
I'm still here.
Why is it showing that? Oh, okay. There we go. But when you're evaluating higher term time frame structure, Ash, I know that it doesn't necessarily inform your thesis for how you're trading these lower term time frames outside of being aware of where some of these things are. Can you give me kind of your higher term time frame thesis? Because I know I've seen quite a bit of your lower term time frame stuff. I was curious.
Yeah. Look, actually, there's a couple things I want to touch on there, because when you started to talk about that, the range deviation at the highs, right? This is what was actually really interesting as well, and I think we did touch on this the last time
A
us three
little
got
bit.
together, but the volume, the up volume in that top range was actually really interesting, because if you actually take a close look at it, and obviously, like, we talked about these volume spikes giving us the indication of the trend, but what we actually saw, if you were to just look at, I wonder if I can just say isolate this sort of section here. If you're looking in this sort of section, oh gosh, it's not going to let me go down there. But if you use your imagination a little bit here, if you look at this volume, right? So white is up volume, right? But it's not a vector candle, and the dark gray is a down candle, but not a vector candle. But when you look at this,
why can't the dark color go up?
Well, this is the thing. Well, I mean, it can if
why does dark have to
can
mean
I-
down? I mean, I just don't.
I mean, like that. Which is standard, by the way. Standard.
That's true Aussie charts. He had to flip all of his charts around before he came on, right?
I'm actually on my head to read this chart. Good Lord. So, all right, hold on. Serious moment. The down volume was actually higher than the up volume, right? In many cases. Right. The down volume, price was going up, but the negative volume was higher in most cases than the up volume.
Yes,
this was literally you've seen that meme from Anchorman where she's like, Mr. Bergen, do you have a massive erection? He's like, no, it's the pleats in the pants. It's the pleats. Right. That's this. That's what this is. It's the evidence is pointing to the contrary to what you think you're seeing, right?
Yes.
So yeah, that was the one thing, because it's very important as well. Like volume. Like you gotta pay attention to that. What was the next thing, Landy? You're talking about how the high time frame analysis leads into the lower time frame sort of trade approach. Did I summarize that?
I was curious, because I know that you do track, obviously, the higher term time frames as it relates to where you are for your weeklies and so on and so forth, dailies, and how you track and set up for the weekly in terms of your trading. But in terms of theoretical, what is your take on theoretical price action over the longer term, which gets far more speculative, right? Than because we just don't have the data for it. But in terms of the monthly and higher timeframes, are you seeing anything that is different or fairly similar? Because I know that we have looked at this. You brought this up the last time that you were here, but do you kind of jive with the thesis that Bits and I have with this?
Yeah, look, I want to be pretty upfront. So I would like to see this whole trend continue, right? I want to see all my sort of standard things coming. I do want to see this range tapped. It feels like it wants to eventually. The only time I'm going to be, and you were drawing this before, if you were sort of saying, like, if we ended up in some kind of a, effectively some kind of range, what did it say, down to here, however you want to draw your range. But if we did see that type of price action, say it did start to do that, like, what I'm really interested in observing is, like, at that stage, you need to become a trader to make any money, or some kind of at least a high time frame spot swing type of person, right? Because like, are you going to hold a spot from 50 all the way up to 150 and then watch it come all the way back down to your entry? Like, are people going to do that? I don't think they will. I think you'd see a huge increase in actual trade volume on Bitcoin at that stage. What that would do with the altcoins is a completely separate discussion, of which I don't have an opinion at the moment. But if you started to see something like that where you're oscillating, I think you would see a huge upswing in quality trade content. I think on X, I think you would see the cycle stuff would slowly dissipate over time, particularly if I think you talked about it was like a 10-year time period. Was it for gold when it did that?
Would be brutal.
Yeah,
It would
technically there was a
destroy so many
10-year
people.
I mean, even if Bitcoin just did it through the next cycle, right? Like even if it just did this through 2030 to 2035 or something like that, like that would be brutal. People would lose their mind.
Yeah, it would be like if you thought the timeline was bad now, like I can't imagine what would happen if it like let's just say it did come down here. Everyone was like, cool, this is it. It starts to look like a bottom, and we start to form this type of move again, and it literally does stall there. I don't even like. I'm not sure if I would even want to be around the timeline, like because I think it would be really hard to like try to. Because I think the everyone that sits around and presents their ideas and trade ideas and concepts for how the charts may or may not move in from the Wolf Crew side. I think that is literally that's a subset of a subset of a subset on side DT, and I don't think that is the norm. I sort of shudder to guess what the timeline would look like and what the spaces and things like that would look like if 2 years down the track we are looking at something like that. But I do think that if you have a solid trade thesis approach to things, I think in that stage you would start to see traders would be more or less they'd be the people making money. I don't think you'd be seeing large spot holders make a lot of money, and I do think you'd also see a whole heap of bleed out from things like ETFs and those funds that are buying, because they're on the assumption that I mean, at least I would assume that Bitcoin is going to do, this, right?
Yeah, where I disagree with that is you can see how BlackRock could be setting up for a scenario like that, because they just launched BITA, which is essentially covered calls as a strategy for generating income, essentially dividends, right, at somewhere around that 12% region. And they're really good at what they do, right? So in a high term time frame, dividend paying wrapped product surrounding Bitcoin, you would get much higher yields when it goes parabolic, but you would have a very steady yield generation in a high term time frame, range bound price action with larger trends to the downside and larger trends to the upside, but remaining fairly range bound, slightly higher highs, slightly higher lows, or equal lows, whatever it might be. Or God forbid, a 55 to 120 range for the next 4 years. Something like that would actually generate right around what they were talking about in terms of their covered call strategy when they described and really have laid out the materials. So like we just got the materials for BITA to basically sell product not too long ago. And that's, I'll be straight up with you. They aren't looking at Bitcoin and going $1 million by 2030. All right. They're going, yeah, no, if it goes range bound, this is why we set the rate structure this way for dividend payouts. And if it were to outperform and go into a substantial markup phase again, then that particular strategy is just going to yield much better than this baseline yield. And
do you think I'm trying to think of this way to phrase this. Do you think the discussion around store of value would have I don't want to say a resurgence, but it would come back into the play again because of the reduced volatility? Yeah,
it would dominate the conversation because you can craft products that generate stable yield by literally, because even though gold being a store of value never, it wasn't about its price action going vertical, right, and then crashing very quickly like it just did recently. That's not the marks of a store of value. It's something that's stable, reliable, that you can build product around, that's going to generate yield in very specific ways. And by the way, that type of a structure that you just drew, and that I've alluded to, and Bits alluded to a little bit, as in this particular conversation, in this context, that would be the mark of true distribution from old OGs in this space to institutions, which, by the way, means that this actually gives institutions a leg up over retail coming in to accumulate, right? Because now they can build a bunch of products and shove them into retirement plans and all kinds of stuff all over the place, your 401ks, your pensions, and different retirement plans for stability purposes. And that's the reason why they would be doing it. And any kind of appreciation in a large way to the upside is just a bonus. Because there's a bunch of different products that you can use to generate yield and stuff into people's portfolios depending on the cycle, and you just have the asset managers move it around. A put cover strategy, a call cover strategy, whatever you want to do. Or with whatever kind of options play and products that they want to build for it.
Yeah. Hey, let me just get to that last point real quick. Just my wife's just messaged me. I've got to take care of some stuff for the family, but I just wanted to touch on briefly when you talk about the weekly, that weekly low time frame trade approach and how we incorporate the higher time frame with that. So the example for that, and it's the one that we had to use this week, right? So if we go to the 4 hour, right, and the discussion was around the 50 EMA, right? And I usually try to sort of talk about those ranges, those numbers when I'm talking about the swing, particularly when we've just had, say, a move in the opposite direction, right? Because for me, so once we've done this, right, even though I think that move looked to be somewhat corrective to me, it still met conditions for what I would say, hey, this is clearly it's not a weak per se weak move, but it's not a strong move either. But so I keep that in mind. But anytime I see a strong move and I didn't get the key things I want, which is volume breaks of my 50 EMA, but I did see a classical run to the 200 and then a consolidation, right? Now, when I see that to me means, okay, on the 4 hour time frame, even though it hasn't met all my favorite criteria, it has met a lot of them, which should be, in my case, we would deem that as a ROS 1. Okay, so a wave 1 move.
Mm-hmm.
What we look for after those things is a period of consolidation or retracement between levels, right? And that's when we go, okay, I understand that in here, if my theory is that I'm inside a higher time frame consolidation, right, I have to take that into consideration when I'm trading the lower term time frames. So what I mean by that is when we dropped down to the 1 hour, let's see if I've got all this here. This is that same move, right?
Mm-hmm.
But on the 1 hour time frame. Now, this M formation was set in and around the 200 EMA on the 4 hour. Okay.
Yeah.
So that's me going, okay, that's clearly a rejection, which means they've probably completed the upswing here. The question remains, how deep will the retracement be? Or are they just going to chop sideways, right? Because both are fine, because both will build liquidity. It's more about the case of what they decide to do at the time. So with that information in mind, I'm not expecting a break below where's the drawing tool gone? I'm not expecting a break below the impulse point, right? Because that would be a complete structure change. And, it's very hard to sort of call that after this move, right? It went on for a while. It wasn't like a quick, sharp move and where you'd be like, it's a deviation, right? So I'm on the mindset of here, when I see this happen, that is my impulse. This here is all consolidation, right? Now, with that in mind, I go, okay, I know I'm setting up for something this week. I look like I've set a peak formation. So I am still expecting a swing to play, but I'm not necessarily going to be confident that it's going to be a really extended or really aggressive move. So I have to keep that in mind. And this is where we go sometimes the swing will play out on the 15 minutes, sometimes it'll play out on the 1 hour. Okay, now the 1 hour swing tends to play out better if you are inside the impulse, right? In the high time frame, because you are moving with the momentum, right? You're catching the wave. if you're trying to play a weekly swing in something like this, which could either be a sideways consolidation or a retracement, that might mean to you that you need to be a little more considerate about your targets and what time frame you're looking at that move to play out on. Okay. And I had someone ask me the other day, they're like, "Oh, what? We're in a 4-hour boardroom," and I'm like, "Yep, that's fine. So a 4-hour boardroom is a 4-hour consolidation."
Yep.
But in my mind, I see nothing that was telling me, okay, that's still clearly an information. I've got a lower high coming into a Tuesday. I've also got these peaks being set across different market sessions on different days. Those are all ticks. And then I had a classical 50 EMA break with volume in that time frame. That to me is giving me all the signs I need to know that we are going to break down. And you either catch that or you wait for a retracement. I normally wait for some level of retracement on that move, and then I look to get involved. And in this case, that's something like this. With normally I would start my stop loss up here, because in case this is not the complete information, sometimes they will come up a little bit higher. They won't break that high before they break down. So normally I set a stop in there, and I start to play with this, right? And I start to look at higher time frame vector candles that can be target zones, liquidity pockets, all that sort of stuff, right? So my trade at the end of this swing this week was, I think it was like 63.6. It was somewhere in this range, because I remember it's what the mark price was. Once we set these wicks and we started to break down, my stop came down to here, all right? And then I let this play out. Okay. Yeah. Now I stopped my trade. It was somewhere around here. It wasn't a great trade in the end. It ended up being somewhere around here, because I started to see in Asia, we saw this big volume break here. Okay. And that to me was signaling, okay, I've either misread this or our swing has played out this week and we are entering the reversal phase, right? So this ended up being, like you can see, it was about a 1.8, 1.9. It wasn't a great trade, but it was profitable, but not fantastically so. But what you can see is you still had all your three levels play out. You had a 50 EMA break on the 50-minute time frame, a retracement. Okay, now if you think about this before, when I talked about the 4-hour time frame, what have you got here? You've got 200 EMA marking it as resistance, right? The same way in the opposite side our 4-hour was, right? Same sort of rule set, just in the opposite. We saw the next wave down, which our next normal classical look is a break of the 200 EMA with volume. We have that. Okay, we ran, we created a wick. Now this here was interesting. This is a really, we posted about this on like the 5-minute. This looked like the Asia low. They didn't end up using it, right? And this is when some of the what should we call it? The discussions around overseas ceasefire types of situation discussions were happening. I won't go into details because that's not what I do. But that's gave us announcement for our 3, and you can sort of see. Where's my volume gone? Does it disappear on me? Oh no, I've just got it like that. There you go. So you see then your biggest climactic volume come in, right? Giving us your level 3. You can also see just that. You've got a volume spike here for all those key breakages of your EMAs, right? Yep. That completed our swing. That was it, right? I should have been smarter in knowing that I was trading a 15-minute inside a 4-hour retracement a little earlier than I realized, but I was fast enough where I didn't get impacted by it. So what we saw then was, because of that, we completed our weekly swing and we started to set our bang, bang, bang. I've got it marked as a W formation here. Some people could mark it as like a triple bottom, whatever, it doesn't really matter. And then what did you see? You saw a peak formation being set. Then you saw price action do the same thing. 50 EMA break, run to approximately 200, right? In this case, it flipped to 200 and held it. You then saw the next move up. Now, as the EMAs start to cross over and you're working inside these sort of flanges, you are not always going to get the same things happening. Now, ideally you do, like you can say, oh, did this sort of break with volume here? Not really. It kind of bounced on it and held it. Doesn't really matter to me. I sort of know what I'm looking for. Once I see that and it holds, you can sort of see here.
Yeah.
This is where I was talking to people saying, hey, because this 200 EMA right here, that's the 50 EMA on the 1 hour approximate, right? I was talking about 62.9, something like that. And this is all around that range where they decided to flip and hold. They gave you then your next impulse, which I think this is all 2. I mean, it's possible it's not, but I think at the moment it's a 2.
Okay. Yeah.
And that's why I'm thinking we might still be looking for this last push up. But like this is how this is what I mean, I do this on the 5 minute, on the 15, on 1 hour, all of those things come into it. But that's sort of how my thought process went this week when I was seeing what we had happen previously on the 4 hour, where we topped, what sort of price action we started to see before we sort of saw the in theory continuation of the upswing at the moment. So, I mean, I'm hoping that sort of answers to some extent sort of how I like your question, Lenny, about like how do we trade a low time frame inside of say a high time frame. This is probably the like normally this isn't probably not the most value trade because you're counter trend trading, I believe, right?
Yeah.
Which is the hardest thing to do because you've got to be really quick and you've got to know when you're getting invalidated really quickly. The more obviously the best way to catch a trade is when you have your low time frame lineup with your high analysis, because you're going to tend to see, at least from my experience, you're going to start to see more powerful moves in that, say, that upswing or in that downswing, because you're not counter trending a higher time trend. So when you get all those things aligned, you tend to have a much better R&R. And from like, without sort of sprinkling in a whole heap of like the trade by design sort of stuff, there's a certain trade that they call the Linda trade, which is basically, if my memory serves, it's if you catch a high time frame pivot on a low time frame, you basically catch the bottom of the wave, right? And you can ride that wave for weeks, as long as you understand where you are and you continually, effectively you're in position management mode for 90% of that time frame, and you're also taking profits, adjusting stop loss, etc., etc. Maybe you're taking some hedge shorts during those lower time frame reversal periods, so you can sort of catch a bit more of that profit before the continuation. But that's sort of like that's generally how I apply that in this case the 4 hour time frame onto the 1 hour and the 15 to sort of help, I guess, understand that whilst here we're looking at effectively price action with a bit of a microscope, understanding how all of this is fitting into what in theory could be this type of thing.
Yeah.
And that's really it, man. Yeah.
Brother, you just got a long SanDisk.
Jesus. Well, Ash, I think that's a great explanation and breakdown. Now, I personally, obviously, I'm watching price action on the 4 hour as well as it relates to some of those lower term timeframes. For me personally, I'll give you my alpha real quick before you head out, and that is that I'm looking at this as we basically we nearly took out my long stop that was moved to profit on the Monday low, right? When we came down on Monday, and then we failed that breakdown, I actually added to that again. And I talked about this because we traded back up during the Monday into Tuesday session above 62.5. And I have my main zone there, 62.5 to 65, because I work in horizontals and I work with the trending structure, obviously, higher term time frame trend break on the daily, right down to the 4 hour. And what is we had basically we had a lower low here to a higher high. So we are essentially trendless with a higher low, lower high. So we were probably going to come down and test that. So I thought I was going to get taken out. I didn't get taken out. But I added to that trade and I traded it back up and I actually closed it I closed it actually right at this lower high right here. So it would have been Thursday
Mhm.
that I closed that trade. And I actually closed it out. One of the main reasons why is because, right now we haven't set this low on the 4 hour, and I wasn't really confident in taking out this high. And essentially here on index, we've essentially have equal highs, right?
Yeah,
So
I think the perps charts might be slightly different. They might be equal or a little bit high. Yeah. It'd be
yeah,
interesting to
because
see across the different perps ones what they look like. Yeah.
yeah, and I believe index is all just spot if I'm remembering correctly. And then we've got this swing here. So, essentially 63, 630. And when I look at this coming from one side of the bands and not actually getting that continuation. So basically, essentially exactly what you're looking at is above the highs. I'm looking for a move higher, 65 and a half, potentially more on the table, expansion to the upside, 68, 70, so on and so forth, 72, 74. But if we start to break the structure to the downside, I'm looking for, you know, 62 and a half to 63 basis band to lower first, and then potentially to head right back down, and then maybe even go for the 58 to 60 levels,
Mm.
come down and realistically try to tag the top side of this zone over here, right? Top side of these candles over here, these swings.
Yeah. So that's where all that deep liquidity is, that sort of 62 to 60,000. That's where
Yeah,
the big chunk of 2 week liquidity is.
yeah, and you were showing that on your chart, and I'm also tracking this, right? So I'm looking at 4 hour bearish divergences. I'm looking at momentum. In this case, this is a regular Stoke. So, but as you mentioned, I during the weekend, I'm just going to watch price to see what develops, because as we come into the Monday sessions, that's what's really going to start defining it, in my opinion. So, brother, great stuff. Like from yourself and Bits, you guys are absolutely awesome and amazing. And we have somebody that joined just a moment ago. Hello, Nat. How are you?
Well, hello there, gentlemen. Doing great, doing great. Awesome, awesome
I gotta
stuff,
I gotta
guys.
run. I gotta run. I gotta
Yeah,
immediately jump
I'm
off.
sure you do.
I
Uh-huh.
I heard Ash's actual
it was
watch
it
go
was
off,
it
so I
was a
think he
great
really
stream,
does
Landy.
actually have to
It
run.
was a great stream. I can't speak to what'll
Yeah, I'm
happen
sure you do.
after I jump off, but it was great up to that point.
It's like, I really enjoyed what I shared.
Great space.
Great space.
Yeah, great space, guys. Great space. Oh man, but I'm happy I made it on. I know I came in towards the tail end here, guys, but you guys are doing such an amazing job breaking down the BCC chart, and I think a lot of the levels that you guys mentioned lined up with the liquidity as well. Last time I was on the show, Landy, we were talking about this big pocket of liquidity at 62K, and we went right for it. We had an ugly candle that wick down, right? So now in terms of like the liquidity, there's some interest in lower prices. Last time on the spot side, we showed liquidity at 50K, but on that order at 50K. On the perp side, there is definitely some buildup between 59 or 60, sorry, 62 to 50K. So there is definitely a lot of interest even on the perp side in lower prices. Do you mind if I bring up the liquidity real quick?
Sure, go ahead. And Ash, if you have to go, I heard your watch going off. I appreciate you, man. You kill it, man. It's an honor to have you on here. And by the way,
Yes, he does. Ash, great job.
for anyone
Yeah,
that is not
thanks for having
following
me.
Ash, he is tagged on my profile. And you're gonna see his profile tag there. I'm gonna paste it in the chat as well. If you're not following Ash, I mean, obviously, if you're following me, you're probably following Bits, not Nash. But if you aren't, make sure you're following him. He doesn't have enough followers. We need more people bugging him. Let me look here. Let me look here. I'm gonna paste it in the chat though. But yeah, Nat, if you want to, oh, before you share your chart, give me 1 second. I wanted to point out a confluence here, real quick, everyone, real quick. So there's Ash's chart, and then there's Landy's chart. If I zoom in here on the daily, that 4-hour low, that is not technically this 4-hour low that I marked off here, this candle low, that technically hasn't set a low yet at 63,630. That is exactly the daily upper first standard deviation for me. And then directly below there, you've got 61.8, which is likely going to be 62 very soon, is the bigger area. You have a green screen. I'm not sure why that's not showing that. Or Nat is green. Nat, you've turned green. Oh, there you are. Oh, maybe she is having connection issues. But yeah, so definitely a ton of confluences with a lot of this. Let's see, it's not actually, there it is. There it is. Are we here? Are we here? Nat, are you here?
I think we lost her.
Yeah, we
see
might
it like there,
It's
but
like
not.
it's black
Yeah.
behind her picture, which is I think it's supposed to be gray like ours.
Yeah.
Okay.
Yeah, so it might be a connection issue.
Yeah.
Mm.
I'm gonna have to jump as well, guys. Wife's about to start pinging me, I think. But I'm gonna have to come back and watch the replay to get Nat's take, especially if she's gonna bring up some kind of dot on the liquidity map from the 24th of June or something like that that hasn't been touched. And I'm like, I don't know about that.
Oh, you guys crack me up. You guys crack me up. Well, I appreciate you coming on, Bits. I appreciate you coming on,
for sure.
Ash. It's a pleasure as always.
Yeah,
And
these are fun, man.
yeah, it's a blast, and I appreciate you guys, supporting, coming to my show and stuff like that. I know you guys have a lot of stuff to do, so I will definitely be catching up with you guys on Monday.
Awesome, man.
Appreciate you guys. Thanks for having me, man. I'm gonna drop anyway. Thanks
Tell
again.
Nat I left because she was coming on. Don't tell her.
I will definitely. I'm going to perpetuate this.
There was no other reason. I have nothing else going on in my life. There's nothing. It's just purely because of that.
Oh man.
No, I wish I could say I'd love to go back and forth on that, but I really do got to get going, guys. But yeah, Landy, dude, thanks for the invite. Ash, great to chop it up with you again, and have a great weekend, guys. I think I'm going to be touching grass a little bit for a couple days, hopefully. So I'll be in and out a little bit, but on a very light basis.
Same.
Look at Kate's comments are hilarious.
Oh,
tell her that's exactly why. Yeah, tell her that's exactly why. There's no other reason. No other reason except
I'm going to perpetuate this this narrative when she hops back on. There she is. All right. Well, you two have a great weekend. I'm gonna talk with Nat for a little bit here. I'm interested to see what she's looking at, how many dots are actually on that chart. And you guys have a great weekend. Have fun.
Yeah, exactly.
Kate is cracking me up.
Thanks, guys. Congrats to the panel.
Congrats.
Oh, that was so funny.
How you doing, Nat? I know you had a connection issue, so it was like we were stalling. We're stalling.
Yeah.
Cade mentioned Nat's in the house. How's the toxic masculinity, or how's the masculinity toxic? How is it toxic? Indeed.
You know what? I think that's funny. I know Bits and we go back and forth, but in reality, I think we share certain similar views when it comes to certain things in terms of like structure and stuff. But it's funny that it's brought up. I think it's hilarious.
Yeah. So I mean, you and I often have a lot of confluence. We are on all of essentially the same stages when it comes to spaces, not necessarily the same shows, although you've been here before when it comes to live streams. So I don't often get to see what it is that you're looking at, but you describe it very well, and we're often very aligned in the areas that we're looking, almost scarily aligned, much like many of us actually. And you mentioned, you heavily utilize the liquidity zones, right? For where orders are building.
Yes,
And
I do.
and I know that you were watching fairly early in the weekend on the or the week after the weekend. So that big Monday dump off with that big low that was set for the daily, went and grabbed some of that liquidity that we were looking for below 62.5. And it was really about, does it, kind of get back above and continue to close there to fill out kind of the 62.5 to 65 zone. What is, if you can share what it is that you're looking at, what is the map looking like now for you?
Yes. So I'm going to try to bring it up. For some reason, whenever I try, um, it boots me. But we're gonna give it a try here. Let's see.
Let's see. All right.
Oh, it's a black screen. Just give it a second. Let it load.
Yeah, I see it loading in the
Yeah.
background. This is,
Yeah. So what's saying? Yeah. So this is
go ahead.
Market Monkey Terminal. Yeah. So this is Market Monkey Terminal. So what's very interesting about this terminal is that it's now legacy. So Market Monkey, they updated into like a new platform.
Mhm.
And so this is the legacy version that we're looking at. I really do still like it. I think it does a really good job tracking the liquidity. At this time we show as well, but
Yes.
in
Yes, you
terms
did.
of just tracking where the liquidity is, Market Monkey Terminal. Yeah. All right, so we're gonna take this. This gives us a nice clear view. It blocks off some of the noise. All right, so this is what I kind of wanted to show uh, the audience. And Bits did a great job with the charts. Ash did a great job with the charts, and so did yourself. So I guess for me, I'll just jump in and decided to jump in and just like show the liquidity of things, because you'll realize that there's a lot of confluence between what you three showed, right? So right here, it's 63. There is definitely buildup that we're seeing here, around 63. It's slight, right? So remember last time we were on your stream, and I mentioned that when it comes to these, like the small pockets of liquidity in here, uh, these tends to be moved around, right? But what's very
Yep.
interesting is the big yellow pop, right? And one thing to keep in mind when it comes to these liquidity is anything that above like 90 million tends to serve as a magnet, and we kind of see how price gravitates towards it, right? This is on the perp side, right? So right now the liquidity
Mhm.
to the bottom is still building, and this is what I mean when we're on the spaces and we're showing, and I mentioned that there's liquidity to the downside, but it's still building, because none of it is to the point where it can work at least not just yet, right? So we'll go through them real quick. So as you can see, besides this little buildup right here, okay, 62.8, there's some buildup there, but the big pocket here, 61 639 million, 61 on the dot, that's 50 million, 49 million. But then here's the very interesting part, right? So if I zoom out and I bring down, see how there is a big pocket, big lines, long lines. This is what I was talking about today in spaces, right? So last time we were on your stream, we saw something similar like this in around like 62K, and we
Mhm.
gravitated towards it. So now we're seeing the double line and the big lines like this in the 50s, which is very interesting. So we have 55 and we have 53, we have 30, 36. So these are still building, right? But this is also something that we have to keep in mind. Where the price tags are. So like 54 million, 55 million, 53 million. Those are areas of interest. Granted, it's not at the 90 million just yet, but it's going to be very interesting to see how it all plays out, because you see how it all goes back to like last week. There's just liquidity just building around this area for some time. So what we tend to see when it's like this is that at some point the price action will gravitate towards it, right? So it's definitely something that we do have to keep in mind. The other thing to note, there is a big pocket there was a big pocket of liquidity at 67, at 57K, I apologize. Over 2 million, 200 million. And we're seeing some now 58 too. But what's very interesting, Landy, is that this doesn't mean that we're not going to head slightly higher, right? As we've seen time and time again, we the price dances above the liquidity for some time before moving to where it go, right? So an area of interest for me
Mhm.
when it comes to liquidity, I can see us doing a quick liquidity grab up to 65K. And I know that you have that on your chart, right? And then above that,
Mhm.
we start to close above 65K. There is some slight buildup at 65.5, and you have that on your chart, right? So this heading into these light pockets, I can see it doing like a quick, some kind of a quick move up, and then right back down to grab like the bigger pockets. Granted, this liquidity levels aren't meant to use on, right? They're meant to use in conjunction with the charts, right? So if we do see closes above 65.5, I can see us heading towards that 68 area. And I know this is an area that you have on your chart as well, right? So you see how
Yeah.
they kind of all line up with with the certain areas that you guys mentioned earlier. Uh, doesn't mean that these small little pockets of liquidity can't be moved around, right? Because we've seen it time and time again. But again, one thing to keep in mind, because there is more, these are weighted, these are heavier. At some point, the price tends to gravitate, right? So
Yeah.
what does that tell us? That tell us that can go higher. There's interest in lower prices, at least in the interim. Can change, right? Because it's not at the hundred at the million, but it's definitely something that we do have to keep in mind. Granted, and I believe Bits has mentioned this a few times, and I think Ash as well. 60K is being defended, right? But if we do go ahead and break below 60K, we're obviously I'm looking at 58, liquidity pocket at 57, and then we head towards what we see here, 55 and lower. So this is just something that I kind of wanted to show. Thank you for opening up the stream to anyone that wanted to come on, Landy. I think that's incredible,
Yeah.
and thanks for having me up. I know I came towards the end, had a previous engagement, but man, I best
Yeah.
to try to make it so I can share with your audience, because it's always good for the audience to get a gauge as to where price can gravitate towards if we break certain levels, right?
Yes. And look, so for those that, because I can see some of the message. So I did and do I don't do it really as much on streams, but I do track order flow analysis. And if you look on the right there, for Binance, you can see the stacked orders and how much is stacked at each price level. Obviously, you're going to see you're going to see the surrounding ticks for price, right? And in this case, you can get a rote readout from a lot of these terminals that will actually tell you. One of the reasons why you see some of the larger orders disappearing is people will pull their orders, right? So this is one of the things, like the orders that you see right below price right now. You could see that orders and that liquidity being taken, getting those fills in, right? And
Yep.
for some of the bids and asks that are further away, you'll see them moving around. So when you're looking at like a Market Monkey terminal or any of the other number of order book analysis tools that are out there and aggregators that are out there, when you see a larger line that is there and then goes away over time, for instance, I think 55K or something like that, I can see on the chart there that those orders were on the way down. They stack the bid,
Yeah.
right? So historical bid zones are going to come in typically right around where many of us are looking for support and resistance areas of interest, right? On a breakdown
Correct.
below 58 to 60, then you're going to see a lot of orders start to stack in those areas. And what happens and why do they typically go away on a weekend? Well, they go away on a weekend because you price can whipsaw on a weekend. Somebody in a lower liquidity environment, if I don't want my bid to get hit, for instance, you can see that the layered bids there, people want to defend this area right now that is bracketing price action. there's a bunch of stacked orders there. One of the things I like to watch for is if they pull their orders, if price starts to head there, right? So um, this is
Yeah. So what?
this is something that people will refer to as spoofing, spoofing the order books,
Oh, absolutely.
because as price moves, they utilize different API connections to just yank the order right as price gets there to let it fall through, and then they stack, and you'll see those orders reappear. So, what is valuable about historical orders that have been placed, especially when you start getting towards the 90 to 100, 150 to 200 million, is that's a strong area of interest, and it might stack up when price is really far away and then go away and then come right back. And what I think a lot of people don't really
Yep.
know about the trading game on perpetuals exchanges, and especially Binance, is you can hook into the API and you can have bots that do this for you. Um, so it is a very, very, very valuable tool, and something that you said, Nat, that I think is really important is it's an additional tool that acts as a confluence for what you're already seeing. So if conditions are met, obviously below 58 to 60, right? It picks up those orders and it continues to fall. The next big area is going to be, and where you're going to
Yes.
see orders begin to really stack hard again, is at that 55, 54, 56. You'll start seeing blocks just light up. And you'll see those orders really start to stack. Now, what I'm curious is, there used to be a lot more order books. There was one that people used for quite some time, and I guess it kind of was it Trading Light? Was that the one that I'm thinking of? They're not around anymore, or are they
I
around?
Yeah, I believe that correct. The last I heard, a few people that I knew stopped using them, so I'm not sure as to bad price. What if I remember correctly?
Okay, yeah. So I think there is also like obviously Market Monkey Terminal has paid solutions. One of the things that I like to do personally, with perpetuals, and I also like to check spot. One of the things that I can tell you is, I'm a spot guy, and a spot premium, and spot premium versus spot discount, type of an evaluator when it comes to bear markets, especially. And I'm gonna see if I can pull this up. Um, verification failed. What happened? Uh-oh, I'm not human. The website's telling me I'm not human. Hold on a second.
Oh no.
Um,
Well,
there we
technically
go.
you're a puppet.
Yes, technically I am a puppet. That is very, very true. Uh, this is where was I looking for? Coinbase Premium Index. I've shown this to you. I think I was talking about this with you on this stream. It might have been the same stream that I was talking to Ash about it. I think, were you here that day? The last time that
Probably.
Ash was on?
I don't think so, no.
Let's see. So if I share this, one of the reason that I bring this up is because you can see the spot rise. Spot is leading above zero. So essentially, when it's green, spot is leading price to the upside. When it's below zero, spot is leading price to the downside, or the premium between spot and perps. So spot is trading below perps, right, or slightly below perps. And the
Yep.
same goes for when it's green, it's trading above perps. So it's either leading the charge or it's not. And in this case, when you have a spot discount versus perps and you see the turn, this is the important part about it. So when we see the turn, it came off the low. Why? Because spot started leading again. So spot started leading back to the upside off of 50, the spike to 57. Now this is the close at 58.5 because it closed above the 58 spike low. But spot led off the lows and then perps caught up. So you see that decrease. So we had a lot of spot buying essentially coming in. So what I like to do is I like to find different order book platforms, and I have my own methodology that I'm not going to disclose here because I took a lot of time to build this with a developer in the background, and it's not public. So I would say find a good public one that can
Oh,
aggregate your spot orders, and you do have to hook into like Coinbase API and stuff like that. And there's a reason why the perps ones are very readily available and made free by these different platforms like Market Monkey Terminal and others. But for those that really, there are some paid solutions. I'm not going to be talking about them because they don't sponsor the show. So Market Monkey Terminal is free. There's a bunch of other free ones. Yes, they have paid programs, but then there's actually paid order book programs out there that don't have free access. You get demo access, and it's not really that great. But they're very good because they aggregate the spot orders versus the perp orders. So you can see where spot liquidity is resting for limits on the buy and sell side, in addition to seeing the perpetual futures orders coming in. So I think that that's something that for those that are willing to go and do some investigation, or if you have the wherewithal to build it yourself, which we have very powerful AI tools, so maybe you could vibe code something up for yourself that hits a terminal um, for you. I think that that's something to aggregate. And if you are using platforms like this, I do suggest aggregating the exchanges and not just Binance, because there's Binance being the biggest is the best in terms of tracking the perpetual futures. But getting a holistic view of all of those orders spread across the exchanges, and for those platforms that do aggregate that, I would definitely look into. And maybe Nat, I'll talk to you behind the scenes, and I'll give you some alpha and some tips on where to look for some of that stuff uh,
so
in the coming
for,
weeks.
on Kiyotaka, the one that we shared the first time, that was spot. Remember how we went through the spot orders, and we both decided, that, and we
Yes.
both agreed. Sorry, we both agreed that spot is king, 100%. So when it comes to like spot liquidity, there is still a big spot order still at 50K. But it's going to be very interesting to see how that plays out, because the spot orders are seldomly moved around, right? So I think it all lines up with everything we're
Yeah.
all seeing on the charts as well, right? If we see BTC break below a certain level, then we all see the potential of these orders being filled, right? Granted, it is holding above 60K, and I think you guys did a really good job at looking at the charts. And also on Market Monkey Terminal, you can combine a whole bunch of liquidity from Binance, from Coinbase, and a few others as well. I
And
believe
probably
even Bybit and Hyperliquid, you can combine all of them, and it'll show you the all of the orders that are sitting on combined on all of them. It's just for sake of simplicity, I kind of just look at Binance, and usually when you see them all lined up, a lot of them have a lot of confluence because they're all basically around the same areas as well.
Yeah.
But
That's
yeah,
awesome.
but
And I'm sure, is that part of uh their free, because a lot of people who are just getting into especially liquidity levels and understanding how that is, because it's an addition, right? It's a confluence, right?
yeah,
Um I'm actually, because I have not to this point gone through and looked at Market Monkey Terminal in detail. I've just gone through like the free side. And is it paid to combine them, or is it
uh,
free to combine them?
Yeah, so the new version for Market Monkey Terminal is paywall for sure. But if Puppet is working on something in the back end, Puppet, and I'm down for some alpha, because I think liquidity, you know how, and I made a post about this before, right? See how real estate, it's all about location, location, location. I think when it comes to Bitcoin, it has a lot to do with liquidity, because we're seeing how price tends to gravitate towards it time and time again, right? So if the Puppet is building something in the background, the Puppet would like to share, we're not going to say no.
Yeah, yeah. I just want to find for the audience that's interested, and definitely I will be in contact to to kind of put you on game for some of what it is that I'm looking at. But if these have programs that actually already combine them, and Trading Light was very popular for a long time. Um, because a lot of it was combined liquidity across various exchanges. And in this case, yeah, so it looks like, and they do have spot. So yeah, Coinbase spot order book. Yeah, so this is,
Yeah, they do. Because last time we showed the spot, right? So I figured this time we'll show the perp. That way, the audience can see the liquidity building on both sides.
yeah. Okay, I see. They also, yeah, and I see what you mean with the update here versus legacy. Interesting.
Yep.
So this is
Yep.
it's not being shown on my screen because it's got my actual name. But
It has the puppet on it.
it has it has it has Landy.btc. No, go and I show it. It's not even close to my name. Um, but yeah, it's these are conversations I think that people who really want to take the next step in understanding, even if it's not for trading purposes, if it's just for accumulation purposes, right? I want to
Yep.
know where the bulk of these orders in because a lot of people price goes down and they're like, oh, okay, price went down. I better get my orders in. And it's like, well, you can wait to see where it's headed based on the liquidity, right? And if it
Exactly.
slices through a level of low liquidity, it's going to go right towards the highest liquidity nodes. And
Exactly.
that's where, even if you're just a passive investor, you can evaluate those moves more effectively. So, um, Nat, it was great having you on. I'm happy that you took the time to come on and chat with me. And look, this is a great show. I have a lot of fun on Fridays. This is selfishly, I look forward to this every week that there's going to be guests, because I am such a nerd and I love to see other people's processes, because we all have a different view of how we break the markets down. And then in many cases, and as this kind of evolves, I'm going to be talking a little bit more about trade setups, which is something that I don't typically discuss, mainly because, well, I don't really have other people to bounce it off of, right? And when I'm just recording my videos about what to look for in price action. So I do want to move in that direction a little bit more over time in the coming weeks. And I want to thank you again, Nat, for hanging out with me and coming on. It's always a pleasure. And I want to thank again Bits and Ash for coming through and sharing the information that they shared, and the outlook and what it is that they're looking for, more importantly, in price action to meet the conditions of further, especially in Bit's case, 75 before 55 or 72 to 75 before 55, which I think is hilarious that he started that meme. Um, and
I mean, it could get there if we start to see closes above, 65, and then we break above that 68 to 69K.
Yeah, exactly. I mean, that's exactly where you and I have been kind of the entire time. The 65 to the top side is going to be kind of the inflection point. Obviously, I'd like to see closes on the daily escape that 65, 6 to 7 region that failed high after the most
Yeah.
recent move up off of 59K originally. We saw that essentially a higher low set and then the lower high spike above 65. So need to see that taken out. It is lining up for the next bigger move in the coming weeks, and, maybe that starts next
Agreed.
week, and this is where, I think these conversations, as price develops over the summer, and I say this to David, and I say it on stages all the time, is this is when you wanna be here. Whether we break structure and we confirm that this area becomes a macro low, which is, in my opinion, this is a move still in progress to the downside. There is no macro low set. There is no low set. This is literally a lower low on the monthly. We're getting a bounce off of a lower low on the monthly. So it's all about being here, evaluating and planning, because if you're not if you're not paying attention, you'll end up chasing when price does turn around. And that's where people buy the highs and sell the lows and they get shaken out.
Yeah.
So yeah, I mean, look, everybody, make sure you're following Bits of Wealth, Ash, and Nat, and of course, follow the Wolf Bitcoin account as well, because that's where you're going to find a lot of these folks and myself on the Spaces events. They also run live streams. Bits runs a bunch, and I know that a lot of the Wolf crew goes through to the FOMO Fridays with Lady Trader as well. So a big shout out to all of you. Much love to you all for entertaining the puppet and the puppet's takes. And then, of course, hang out here. Keep an eye on the timeline. David will be back on Monday for the breakdown. I'll be on there with him. And then, of course, on Monday, I will have a recorded video out. You can definitely find Nat, myself, and Bits and Ash over on the Wolf Bitcoin stages for Spaces. And then, of course, ATC Monday through Thursday, even not 30, Thursday at 5:30 p.m. Eastern Standard Time. Got all things crypto with Dave, Cool, and Nat, and sometimes myself and Moni behind the account they're hosting on
And you
Thursdays.
guys do an amazing job on Thursdays, by the way. Great
Yeah,
job.
I appreciate that. Purple pill, no purple pill. Who really cares at the end of the day, right?
Yeah.
Some ghost starting the account when me and Moni are like, "Wait, did you start it? Did you start it? No, was it Dave? Was it Nat? Who did that?" So
Oh, that was so funny.
yeah, it was definitely, well, confusing and hilarious at the same time. But
It was David.
we're definitely going to see you all next week. And for those that don't come through to ATC that follow me, you really should, because it is a very different show than the Wolf Bitcoin space that many that come to look at analysis like this. A lot of you, you're in tune with price analysis. The All Things Crypto show with Dave Cool and Nat, that is focused on kind of what's going on, a little bit of TA kind of focused price stuff, but also kind of what's happening, what's hot, what's trending, and what's going on in the crypto industry, and sometimes in the wider markets as well. And it spans everything from crypto to AI to markets in general. And you really should come through. And of course, you'll see me repost that. You'll see Nat repost that on Monday. So I'll talk to you all on Monday. Again, thank you so much, Nat. I appreciate you. I wish you all a wonderful morning, afternoon, and evening, no matter where you are in the world. Please trade safe. And of course, as always, stay safe. And also have a great weekend, and go and touch some grass, touch some ass, and have some fun. Take care, everybody.
Great way to end it. Great way to end it, Landy.